Good morning, everyone. Welcome you all to this CII session on the 5-year journey of GST and the way ahead. So we will start the session in the next 5 minutes. Till then, I request everyone to enjoy a cup of tea. Thank you. We'll be back. We would now start our first session for the day, which is on GST law and compliance. I would now request our panel for the day to join us on the dais. Mr. Uday Pimprikar, Chairman, CII Core Group on GST and Indirect Tax Leader, who would be our moderator for the first session. Mr. D.P. Nagendra Kumar, Member GST, CBIC, Ministry of Finance. Mr. S.K. Rahman, Principal Commissioner, CBIC, Ministry of Finance. Mr. Sanjeev Agarwal, Taxation Head, BMW India. Mr. D.D. Goyal, Executive Advisor, Finance, Maruti Suzuki India Limited. And Mr. Pramod Jain is a bit, I think, delayed. He will be there in the next minute or so. He is the Tax Head of Flipkart. Thank you. Over to you, Mr. Pimprikar. I'm so sorry. So the opening remarks will be delivered by Ms. Tanushri Banerjee, Deputy Director General, CII. Tanushri.
Good morning, everyone. Honorable Shri D.P. Nagendra Kumar, Member GST, Central Board of Indirect Taxes and Customs. Shri S.K. Rahman, Principal Commissioner of Customs, Central Board of Indirect Taxes and Customs. Shri Uday Pimprikar, Chairman CII Core Group on GST and Indirect Taxes, leader, EY India, Mr. D.D. Goel, Executive Advisor, Maruti Suzuki India Limited, Mr. Sanjeev Agarwal, Tax Head, BMW, and we are all waiting for Mr. Pramod Jain. Eminent industry members, media, ladies and gentlemen. On behalf of CII, I welcome you all on this very auspicious occasion on the completion of 5 years of implementation of GST, a mega indirect tax reform. 5 years ago, on July 1st, 2017, India overhauled its indirect tax system with the introduction of goods and services tax, commonly known as GST. It revamped the country's entire indirect tax structure and significantly modified tax administration and compliance. This comprehensive multi-stage value-added tax on goods and services turned out to be a game changer for the Indian economy as it abolished various indirect taxes and brought all of them under single umbrella. To ensure a smooth and seamless transition to the new tax regime, CII undertook various initiatives to handhold the Indian industry and enable members to acclimatize to this technology-driven tax reform by organizing multiple nationwide conferences, seminars, webinars, and interactive session with the senior officials of the Central Board of Indirect Taxes and Custom Officers, along with the tax experts. Apart from providing help desk services to the members to clear their doubts on a real-time basis, CII also launched a live program called Tax Clinic for 1 month on popular TV channel to help and educate the taxpayers about the new tax provisions. Over 100-day long sessions and master classes and more than 15 numbers 2 to 3 day long GST training programs were organized for the industry. Today, we celebrate as GST completes the important milestone of 5 years. To mark the 5-year journey of GST, CII has engaged its membership all across the country by organizing special GST sessions at various regional offices recently, deliberating on the key features of the tax transformation and the way forward. Today, we have lined up important sessions on various key aspects of GST related to policy, compliance, technology, rates, etc. concerning industry. How did the introduction of a simplified tax regime, automation of tax compliances, and the introduction of e-invoicing and e-way facility promote ease of doing business across sectors? How does GST emerge as a key enabler and simplify the indirect tax system while ending the complexities the industries has been dealing with? Today we have with us Shri D.P. Nagendra Kumar, Member GST CBIC, and Shri S.K. Rahman, Principal Commissioner CGST, to share their views on the government perspective. Shri D.D. Goel and Mr. Sanjeev Agarwal will deliberate on the industry perspective along with Mr. Pramod Jain on how we have achieved so far on GST procedure and way forward. The session would be moderated by Mr. Uday Pimpurikar, Chairman CI GST Core Group. I would request that if you can kindly take over the session and moderate. Thank you.
Thanks, Anushri, for this. I mean, I'm just going to start off just giving a little bit of perspective. I'm really thankful for Honorable Member GST, Shri D.P. Nagendra Kumar, and Principal Commissioner, Shri S.K. Rahman. You've graced us on this occasion of when we are commemorating 5 years of GST and granted his time. And I'm also thankful to my fellow panelists and all of you here to attend this. I've always felt that policymakers in general, and specifically in India, are marsupials. I mean, for the uninitiated, marsupials are people or mammals which give birth to underdeveloped babies. Humans are marsupials. I mean, you have to then tender to them afterwards. Okay, and it's not a bad thing. It's in fact, if you talk to experts, humans' survival, Homo sapiens survival, was actually fairly credited to the fact that humans need not be more pregnant than more than 9 months, unlike some of the other mammals and so on and so forth. So it's a good thing, and India needed that. When India implemented GST or enacted GST, everybody knew that it was the start of the implementation of GST, and now we have crossed 5 years. The baby is now 5 years old, hopefully starting schooling, has survived the pandemic, the initial bumps as well, okay, but the parents should be extremely happy about how hale and hearty the baby now is. And one of the parents is anyway out here on the panel. He is the one who has contributed immensely to the drafting of the entire legislation. What I'm personally impressed with is how confidently India has charted its own path, okay, and absolutely fearlessly, okay. Some of the stuff that got done at that time, and even through that time from now in the last 5 years, was unprecedented. We went about constructing a GST council. I think the construct of a GST council is an extremely, absolutely mind-bogglingly astute decision from an Indian polity perspective. Okay, while there are a large number of conversations now that are happening, especially after some observations of the SC recently, but to my mind, the constitutional construct and now the GST construct gives very little avenue for people or states not to be aligned, okay, or center and states not to be aligned. And the overall framework, to my mind, which is unique to GST as such, I mean India as such, has been implemented brilliantly. The second success story, to my mind, over the last 5 years, for sure, has been the overall integration between policy and the technology framework. We are going to have a session later on technology, okay, and where we'll hopefully discuss whatever has happened in the past and also in the future, where we are going and so on and so forth. But what the policy makers have been able to achieve is much better compliance. In fact, I can say that the compliance culture has been rammed in through both these elements, superbly done. Okay, I remember in the Chief Economic Advisor's report pre-GST, non-compliances were estimated to be around 58-60%, so which means that the tax that should have been collected and the tax was being collected, the estimates were that only 41% of the tax was being collected. I'm not saying that all of it was of non-compliance, but large part of it was driven by non-compliances. And now, to my mind, after the last 2-3 years, clearly the overall collections at least suggest that the non-compliances come down to, I think, to my mind, less than 20%, which is a brilliant thing for a diverse country like India. And all this couldn't have been achieved by the conscious effort and fearless effort of implementing the technology framework, starting off an e-invoicing, then putting off certain policy measures which made significant, non-compliance hugely problematic. So brilliantly done. Again, congratulations. The fact of the matter is that, what about the future? 3-4 elements. I will talk about the more benign ones, which are more hugely important still. The data that we have now, okay, on the GST portal is so kosher, so high quality. If that data can be used far better, okay, and with more people using it, it will immensely have immense value in relation to investments and so on and so forth. Today, it's being used really well by the tax administration. And that also actually is pushing up the compliance culture. The diverse usage of that data is of equal importance, and I think we should really see how we can put this in place. While everybody realizes that the enactment of GST happened 5 years back, the GST Act got enacted, The implementation journey is still on, okay? And I think we have just covered the first episode in maybe episode 5 of this entire series that we are going to see. It was extremely successful because we've got the revenue stability now. Of course, the next focus to my mind would be possibly rate policy, sir. I mean, so once that rate policy gets done, we will then kind of move into other sets of, I mean, we'll probably need to kind of purposefully move in for the other sets of agenda, which is simplification, which is removing or mitigating the cascading impact. Today, the cascading impact on the economy on account of excluded sectors, on account of some arbitrary restrictions or deferral of credits and so on and so forth is fairly high. That needs to be handled. And the third bit is actually getting certainty, getting some amount of reduction in punitive measures, okay, to my mind, is also equally important. India needs to be an easy place to work in, and so some of the complexity and the punitive measures need to be rationalized. When India's history is going to be written for this period, okay, to my mind, and I have no doubt that some of the measures that were taken in the last 5 years, especially related to GST, are going to be highlighted as the catalyst for the next phase of growth. And to my mind, I think it is, we've gone through this journey brilliantly, and all I can say is congratulations and all the best, Godspeed for the future. With this, I'll call Nagendra sir, whether if you can come and address us. Thanks a lot again.
Very good morning to all of you. At the outset, I compliment CII for organizing this day-long session in mark of the 5 years completion of the GST journey in India. I think Mr. Pimprikar has rightly put across that this has been a very, very, what do I say, as a landmark reform in indirect taxation. For that matter, I think the post-independent India, I think this is the largest tax reform we have undertaken. Looking back this 5 years of the GST implementation journey, and particularly even earlier to that period when we were working on the GST law, maybe starting from 2007 onwards, and bringing out the first discussion paper and putting in the public domain the broad contours of the GST, which is proposed to be implemented, to the constitutional amendments, the first attempt and the subsequent constitutional amendment, the select committee's details, examination of those provisions class by class, the differences that prevailed, the mistrust which pervaded all around. I think the pessimism with which I think the industry looked at whether the GST would get at all rolled out in a country like ours. I think this journey of 5 years is a testimony that we could have the resilience to overcome those difficulties and challenges. The 5 years have been a learning curve for both the taxpayers and the government as well. I think a lot of appreciation has been said about the government role in GST, but to my mind, I think the real credit for this journey of 5 years belongs to the taxpayers. I think they are the one who made this journey momentous in terms of adoption. Some of the key factors which enabled this journey to a large extent satisfying the key objectives of the GST has been one, as Mr. Pimprikar said, about how did we address those challenges and how did we overcome. I think that would be a good context setting for us to discuss about where we need to go further. The first and foremost was the constitutional, what do I call, if it is a limitation as such. I think given the powers to tax at both government levels, to bring them on one platform, to bring in that harmony, the uniformity, and also ensure that the rates, exemption thresholds remain common and uniform across the length and the breadth of the country, would not have been possible without the path-breaking constitutional amendment which came to be passed. This amendment in a way is basically altered the basic structure of the Indian Constitution, if I may say so, in the sense that for the first time we moved out from the list-based approach to a simultaneous levy of tax both at the central and the state level. This was the first beginning, and that was one of the major milestones in achievement. How did we achieve that? We achieved it basically by reassuring the federal partners to ensure that in case there should be a loss of revenue on account of the introduction of GST, I think it is the states to a large extent pull their sovereignty into the common with the union government in bringing these tax reforms. The compensation formula which was envisaged and provided for by the then Union Finance Minister in the Constitutional Amendment Bill was one of the game changer to persuade the states to join the GST bandwagon. And looking back, I think in the 5 years of the journey, I think this assurance gave a large level of comfort to the states, and especially when we talk about, I think, the shift from the origin to a destination-based taxation principle. This is the first fundamental prerequisite which made the GST possible in our country. When we look at the way the GST Council was constituted and how it performed its role in a proactive manner, I remember on 8th of September 2016 was the date on which I believe the constitutional amendment got the presidential assent. Within 4 days from that, the GST Council was constituted, if I remember correct, on 12th September. 16th September, the GST Council met for the first time. Prior to the GST introduction, 19 such council meetings held across the country, took major decisions in terms of arriving at the model GST law being implemented for the CGST, SGST, UTGST and the IGST plus compensation, determining the rate of taxes over 1200 items, determining the move towards the GST in terms of the transitional provisions, and also put in place a technology backbone in terms of conducting the businesses from 1st July onwards. I think those decisions were very momentous, and looking back, one can only say the political will that made this tax reform possible in a country like ours. Now, if you look at the challenges in terms of policy making before the GST Council, I think bringing uniformity and also building those blocks through a consensus-based approach required a lot of political, I think in a dynamic democracy like us with multi-party system, was the biggest challenge. I think this would not have been possible without a GST Council. And if you look at elsewhere, around 140 countries which have implemented the GST or the VAT in one form or the other, there are no parallels to the GST Council what we have done in our country through a constitutional mandate. I think the previous speaker mentioned about the Supreme Court decision recently with regard to the role and functions of the GST Council. The constitutional amendment very carefully struck a balance between the legislative supremacy of the parliamentary sovereignty vis-a-vis what an executive could do. I think 279A, all that talks about is, it's only of a recommendatory power. But if you look at the 47 GST Council meetings and decisions spread over 1400 agenda points, I think the consensus have been the way. Even in one single issue where there was the voting, I think the federating partners chose to implement the GST Council decision without any deviation. And this is something which I would say when we look back the 5 years of the journey of GST, we can't forget this. This is very, very important for us. And that is where, this is where lies the future of the GST, and I have no doubt in my mind. Given the maturity with which our political economy has addressed some of those key challenges in the transition period, I think going forward, there is no reason to doubt that this council will continue to play a role in ironing out even all those minor differences which may be there in making our GST an ideal GST in the times to come. Now, the second important dimension of the GST implementation was with regard to the creation of the GSTN. The GST portal today, I think the second session is completely, I think, dedicated to the tax technology, which is actually a driver in bringing the GST implementation on a fast track mode. Those of us who administered the taxes in the pre-GST regime had some amount of automation. Online filing, online payment of taxes were part of some of the design in terms of the central tax and the state tax administrations. But the way in which the GSTN was conceptualized, it was operationalized in a format when the transition was happening on a real-time basis. I think GSTN did undergo a lot of difficulties in the initial periods of its operation because it was almost like building the craft while it's on sale. We introduced on 1st July 2017 the GST. Some of the key business processes like migration of the existing taxpayers to the new tax system, issuance of registration to the new businesses which want to come on the GST on board, and also ensuring that it is done completely on an end-to-end process and online was a huge challenge. And the first GSTR 3B was to be filed by 20th of August, and hardly we had any time at that point of time, the GSTN, to tweak its processes to bring it. And from a GSTR 1, 2, 3, we brought to a consolidated return. And what do I see? I think with the dexterity with which the GSTN portal has handled some of the key business processes over the first 3 years has been one of the major contributing factors for the success what we've achieved in implementing the GST in a smooth manner, albeit the initial challenges. Today, GSTN handles the data unparalleled in any of the any of the portals anywhere in the world. The statistics are there to be seen by every one of us. Be it in terms of the filing of returns, 89 crores of tax returns have been filed. If you're looking at the e-invoices, in less than about 19 months, we have close to almost about 300 crores of e-invoices. In terms of the e-way bill, which again an innovation in our country with regard to tracking the movement of the goods, which was one of the requirements for the states to ensure that their concerns are addressed, we have a portal which has been handling more than 295 plus crore of e-invoices, all online without any human interface. Today, if I look at the tax refunds which have been disbursed to the GSTN portal, close to almost about 5 lakh crore. From 26th of September 2019, it is completely automated without any human interference. And if you can look back and see how this was managed, it would have been only possible because of the way in which government positioned the GSTN as an SPV, brought in the professionals, engaged with some of the best service providers through the managed service provider model. That is how this could have been achieved. If GSTN were not to be there, the success of GST could not have been possible today. That's the second key enabler. Sanushi was mentioning about enabler of GST as a business. I think I would say these are the key enablers, be it a constitutional amendment with the GST Council or for that matter GSTN. The third important factors that contributed to the successful implementation of GST in our country is with regard to the single interface model which the government came up with. The constitutional amendment provided for implementation of GST, but the best of the tax policies can fall flat if it is not administered properly, and the tax administration plays a very important role in this aspect. Assigning the taxpayer to a single tax jurisdiction, irrespective of the fact that whether it has to be administering the central tax or the state tax or the interstate tax, I think that was a major decision taken by the GST Council. The single interface model today assigns the taxpayer to a particular tax jurisdiction. So the CGST and the IGST which belong to the center is being collected through an administrative mechanism of the state and vice versa. To a large extent, I think the concerns with regard to duality of the tax administration has been addressed by the single interface model. We do have still challenges going forward. A lot more need to be done in this area, but the design what we got and the consensus with which it has been implemented across the country through a common uniform approach has been one of the contributing factors for the success in GST. It's not merely the uniformity in laws, uniformity in the procedures, common tax rates or exemptions, but it's the way in which the tax administration conducts those key business processes, be it on a compliance verification or for that matter facilitation. I think this is also a very important contributor for the success of the GST in our country. Now, when we look back the 5 years of GST, and if you look at the transparency with which this tax reform has been introduced in our country, is yet another important factor which we cannot lose sight of. All of you will be knowing the day the GST Council meets, the press release gives the decisions taken on the very same day. None other than the finance minister, who is the head of the GST Council, himself or herself comes and tells exactly the general public as to what decision, what were the issues deliberated in the council and what are the outcomes. And a press release is given immediately to make aware about what decisions we have taken. And every decision taken in the GST Council is put in the GST Council website. What were the deliberations before the Fitment Committee? What is the deliberation before the Law Committee? What were the factors which were agreed to? What were the factors not agreed to? Everything is very transparently put in the GST website, GST Council website. I don't think you will find a parallel anywhere in the world with regard to the transparency with which we administer the GST. The Fitment Committee's decisions to accept a particular recommendations or the industry's request, or a particular request not considered for acceptance or deferred, everything is put in the public domain for anybody to see. The transparency which has been brought into in the decision-making process in GST Council is yet another thing which I think leaves no doubt in our mind that the genuine and legitimate interest and the requests of all the stakeholders is duly taken note of and implemented with utmost transparency. That's what I would say, that's a very important thing for us. Now, for example, in 47th GST Council meeting which just concluded on 29th of June, you would have seen, I think, the Fitment Committee's decisions exactly, the press release will say exactly which are the rates on which we changed, which are the law we have amended, which are the circulars which will be put. Everything comes in absolutely in a transparent manner. In fact, if you look at the GST and database with regard to taxes collected on central tax, the GST, IGST, etc., they are put in a year-to-year basis for the public to see. Now, these are the enabling factors, I would say, has what made the GST a reform which is here to stay and improve further in the country. This journey of 5 years has taught us important lessons. One, for us in the central government, I think we have learned how to collaborate with the states. Today, the tax administrations are talking to each other in a much more collaborative manner. This is one issue which would have to be looked into for the future. We talked about the uniformity and the law. How do we administer this law in a uniform manner is a very, very important thing to see for the future. Concerns are raised in the industry, and also we have been hearing from the platforms like this that if the law is uniform, why there should be a different approach in administering the laws between the center and the state? Can we do something with regard to those areas of work where there can be a common approach in administering that? For example, if you are talking about tax audits or tax return scrutiny, can there be one authority could do this work instead of doing multiple authorities, especially for those entities who are having presence in more than one jurisdiction? Now, can there be a uniformity in approach towards this direction? And that's something I think we could look at for the future. But today, we need to appreciate one thing. GST is administered at a subnational level with individual identity, notwithstanding the fact the business could be one. Now, the states are very, very important partners in the GST. At a subnational level, we need to recognize this principle that there is a sovereignty which they have pooled for coming together for implementing the GST in the country, and thus sensitivities will have to be kept in mind. While administering the tax, while we will make every endeavor to see that the uniform approach is adopted so that the pain points are reduced, but we need to keep in mind that the states do have the sovereign power to administer the taxes in their own jurisdiction. The center will play a very unifying role in taking further the uniform approach in implementing the taxes further. In areas of planned work like scrutiny and audit, we don't see much challenges. We could collaborate, work together in a coordinated manner to ensure that the taxpayers are not put into much of inconvenience and difficulties. But those are matters which could be deliberated upon in future in GST Council, work out the modalities and take this further. The second aspect, insofar as the GST in future is concerned, the simplification. The law as it is when we drafted and introduced in our country was basically a furtherance of how we administered the goods and commodity services tax in India in the past, and also drawing inspiration from some of the international experiments. But given the uniqueness with which we have placed the GST in India, for example, if you are talking about the IGST, the interstate trade and commerce, how we have taxed, ensuring that the credit chain completely follows on the value chain without any obstruction. It's a unique thing with our country. Now, if you look at basically when we are talking about sharing of the taxes between the center and the state, again, this model largely helped in addressing those concerns, which some of the, even the most advanced tax administrations still struggling to address those concerns. So we have developed some of the unique design for our country. So when we look at in future the simplification, we will keep the uniqueness of the Indian GST in mind and take it further. And every GST council decision, every passing day for that matter in GST, I think that simplification journey continues. We have a large number of areas in which the trade and industry and other stakeholders have been pointing out to us the pain points in implementation of the GST. And the council and the government is conscious of the fact that some of them need to be addressed. To cite an illustration, I think we had a huge issue from the service tax era with regard to how do we deal with intermediaries. The amount of litigation this has created in our country in terms of the disputes, especially with regard to place of supply, all of us are know. Now the circular issued in the month of September 2021 to a large extent clarified as to what do we mean by intermediary and how do we address those concerns. Some issues could still survive with regard to that in terms of interpretation, but to a large extent we have addressed that concern. Similarly, an issue with regard to the taxability on liquidated damages. The 47th GST Council deliberated upon the contours as to how, in terms of a service said to have been provided where an agreement to do or not to do or tolerate an act led to a lot of an interpretation which was not the basic intent and purpose of the law. I think the circular which is to be issued, of course the council has taken a decision, we are in the process of issuing it in a day or two, would largely clarify how it will impact on the business. The extensive use of the power under section 168, where the council has chosen to clarify on matters of interpretation, would also again would say, I think those simplification process will continue to be the guiding force in terms of smoothing the implementation of the GST in the days to come. Insofar as the rates are concerned, all of us know today the revenue buoyancy is there, the speakers have been talking about it, but still we are falling short of those aspirations of some of the states which are continued to be not getting the tax in the desired extent in which the original design plan for the growth in tax revenues. The GST Council has constituted a GOM which had submitted its report, interim report, and the rationalization process is on. But we all need to appreciate one thing. The revenue neutral rate, which was estimated prior to GST, was in the order of around about 15.5%. And all of us know that the effective rate in the GST post was almost about 4 percentage points less than that. Now, notwithstanding the reduction of 4 percentage points in the tax incidence pre-GST and post-GST, a lot of correction which have happened over a period of time in terms of correcting the inverted duty structure and also ensuring that the exemptions are prone to not only to benefit the revenue but also to correct the blockage of credit chain. Many times when tax rates are rationalized, there is a lot of criticism with regard to increase in rates, but mind you, when we do this, we want to see that industry's aspiration that multiple rates of GST is a bane in GST as said by the industry or the business. We are only correcting that and we are moving towards the direction of maybe a 2 rate or 3 rate. I think today when Revenue Secretary will talk to you in the afternoon, he will explain exactly what are the nuances of that and what are the challenges we face in moving towards the direction. But all these rate corrections and pruning of exemptions are toward that direction to achieve that desired objective of having maybe 2 rate or 3 rate structure and also completely remove the inversion. Removal of inversion doesn't mean increase in incidence of tax, and many a times because of the eligibility and entitlement to the credit, the cost of actually, I think, supplying the goods and services could come down considerably. I think that effort precedes a wide range of consultations. You look at the mechanism by which all these are achieved. To start with, the law committee and the fitment committee dealt with the law changes and the rate changes. Now, the latest trend, what you see in the GST Council on any issue on which there is an important matter to be deliberated upon, the Council has been constituting the group of ministers. The group of ministers are asked to come out with a report on issues. If you look at the report on the rate rationalization is a pointer to the trend. I think the GST Council recently has constituted a GOM on tax tribunal, which is a long pending issue. With a timeline by 15th of July, they're supposed to submit the report. And the Honorable FM has gone on record saying that by first week of August, we'll have another council meeting to sort out that issue and come to a final conclusion on the tribunal. Now, this trend of constituting the GOMs will bring into foreplay a more a consensus-based decision-making process within the council, further aiding and advancing the harmony principle which we have discussed about a while ago. Now, going forward, as I said, 1, simplicity. 2, I think some of the small pain points which have been pointed out, like the difficulties in input tax credit, I think my colleague Kader will take you through what exactly we have done and what is the unfinished agenda insofar as that corrections are concerned. We will also continue to work on clarifying some of the issues. That's one of the important things which we have taken upon ourselves, that whenever industry has come with an issue or a challenge with which a particular provision is being interpreted, I think we would not hesitate in coming out and clarifying the position in a proactive manner. Particularly in respect of those conflicting advance rulings, the GST Council has guided and given conclusive clarifications on particular matters, setting at rest the disputes. Going forward, I think the constitution of the GST Tribunal, on which I think there is a broad consensus, but the GOM will further look into some of those issues, keeping in mind judicial rulings on the matter. I think that would cover one of the gaps which exist in the present schema. And also, I think looking into the balance in the revenue growth, I think we look at somewhere, I think the next 5 years is going to be a settling down period in which I think probably all those challenges what industry faces, or for that matter the concerns with which government moves very cautiously insofar as these changes with regard to revenue effect is concerned, is going to be settled down. All in all, I would say that this journey has been very challenging for all of us, and we acknowledge with a lot of sense of satisfaction that the Indian taxpayers have been very adept in adopting to the GST, particularly in the tax technology, and making this tax reform, I would say, to a fair degree of a success. Thank you once again, and I am grateful to GCI for giving us this platform to talk to you on this journey. Thank you.
I'll request Shri Rahman to kind of give his perspective. Mr. Rahman, thanks a lot.
Shri DP Nagendra Kumar, member CBSE sir, dignitaries on the dais, and lot of leaders of trade and industry, consultants sitting here. As I have been in GST right from 1st May 2017, as a part of DG GST, I met many of you. I could correlate, I could see familiar faces. And first of all, greetings for completion of 5 years of GST, and also the pain and the ups and downs we have undergone, both government as well as trade and industry. And we salute to you. We salute for your patience. We appreciate the resilience with which you fought back, even though in the last 5 years, 2 years have gone in COVID period also. So to that extent, it was difficult time in the last 5 years, but more or less at the completion of 5 years, now you are seeing that we are much, much better and comfortable position when compared to many countries who have implemented or attempted to implement GST. I would like to thank the industry consultants for holding our hand throughout this journey. Today's panel discussion, I've been called for panel discussion because member sir has already briefed you. He has told enough about the GST and other things. In continuation of that, just to supplement, I would like to stick to the topic of panel discussion. Panel discussion is more on ITC, export refunds, and investigations and decriminalization. So keeping that in view from the government's perspective, let us take ITC. Now, if you remember 5 years before when we are in the regime of central excise and service tax, you know the restrictions that were there in ITC, VAT credit, and restriction that was there both from central excise service tax separate credit and VAT separate credit. The very definition of inputs, input services and capital goods has been so wide to cover any or many of the inputs or input services that are going into the supply of your output supply, what could be even intended to supply or used in the supply, or which could be in the course or furtherance of the business. See the wide definition that has been given, and more or less many of the industry has been taking almost all input and input services in this. Let's be positive on this when compared to the earlier regime. Of course, there have been some difficulties. Please understand, government side also, the revenue is required. Nation is made when taxes are paid. And the tax that we have been saying every month, 1.44 lakh crores, this is just 15% or 20% of the total tax liability. Industry discharges tax, you mostly using ITC to the extent of 80 to 85%, and what is discharged through cash is what is being talked in the press releases, which is in the range of, as on date, approximately 1.44 lakh crores to 1.5 lakh crores. And even take the definition of capital goods. Capital goods, the way it was defined 5 years before in central excise and service tax, was with respect to specific tariff headings. I am very sure many of you are very experienced, you will understand that. But today the definition of capital goods in GST is that what is capitalized and which is used or intended to be used for supply of goods and services. To that extent, it has been a wide coverage of capital goods. And not only that, even at the time we used to take only 50% in the first year, then later 50%. Now it is the entire 100% of the credit you are able to take at the arrival of capital goods into your premises. And I would like to also touch upon few sections that have been amended in the last 2 years. Let's take with respect to, let's take about 16.2 AA that has been implemented from 1/1/2022. This was basically to avoid litigation. We don't believe in litigations. Lot of writ petitions have been filed about restrictions on ITC on the basis of GST at 2A initially and later GST at 2B. So we thought, it's better for once for all to amend or introduce 16.2 AA, wherein we saying that obviously ITC credit is to be restricted to the extent of what is mentioned in 2A, and later we have said 2B. This was only in support of those genuine people who would be taking the ITC credit. You have been hearing the other side also, so many ITC frauds have been detected, unlike our earlier period of VAT and service tax. You must be hearing in the papers about the total frauds and all that are happening. This has been done 1/1/2022, and prior to that, obviously, it was based upon rules on which it has been taken. Now let us take up this Finance Act 2022. If you see 16.2 BA that has been introduced, this was also to say the recipient would be taking credit as it is mentioned in GSTR 2B. If it is mentioned in GSTR 2B, two parts are there. One is where ITC credit can be taken, one which cannot be taken. And to that extent, we have amended section 38. Section 38 has been completely replaced, substituted to restrict people not to take credit which is mentioned in GSTR 2B. Meaning, as a taxpayer, you are well aware that in 2B it is appearing that this credit need not be taken, shall not be taken by you. Similarly, if you talk of, let's say, class 105 that has been introduced in this bill, which says about, which amends about section 41 of the CGST Act, fundamentally 16.2C says that you can, as a recipient, you can take the credit only if your supplier pays. But it was very difficult for the government or for the taxpayers to monitor that. So the proposed section, proposed means is a part of the Finance Act. Of course, a date will be announced after the states also pass similar amendments. So it says that 16(2)(c) credit you will be able to take only if your supplier pays the tax. And if at all you are taken, you will have to reverse with interest. Of course, after the supplier pays the tax, you can again take back the credit. This is also to make system stable, that unnecessary credit you don't take and unnecessary credits you don't have to reverse. You have also seen, generally I go for many of the events during my last 4.5 years when I was in council for council secretariat. Many people used to say about 17.5. Yes, 17.5 is a negative list that has been given. All of you must be aware, CGST Amendment Act 2018 made effective from 1/2/2019, wherein we have repruned the section 17.5, given a very short list and given a modified version of about the vehicles, and we have also said about credit to be taken with respect to beverages, health services, renting and hiring of motor vehicles, if it is a liability under a particular tax, any tax, under any law. If it is any obligatory under any law for employer to give it to them, then you can take the credit. To that extent, 17.5 has also been pruned. Still work can be done. So government, the very fact that so many notification circulars have been given is only to listen to it. That this is a government which has been working for last 5 years, where the industry's views are well considered, industry views are incorporated, industry views are, that is how the act is also being amended. If we talk even in terms of, let us say, goods and services that are going into exempted or non-exempted, clear-cut provisions have been given, wherein if common items are used for exempted supplies or non-exempted supplies. Here, when compared to central excise, I am always comparing because it's a journey of 5 years. When compared to that, capital goods was not there. Now here we have mentioned that the credit taken of capital goods, if it is going into exempted services or exempted goods, then to that extent reversal we have to do. But the positive aspect is, if you have noticed, on 17.3 was slightly amended with effect from 1/2/2019, where we said that supplies mentioned in Schedule 3 are to be treated, not to be treated as exempt supply. That means the credit on them can be taken, excepting few like land and other things that we have said exemption list. Excepting that, more or less the supplies that are mentioned in Schedule 3 do not fall under the exempted category. Therein you can take the credit. Another aspect is about 16.4. Many of the people now got used to it. Otherwise, if I remember well, sir, I have gone through this journey in 17, 18, 18, 19, sir. Many people on the first year, if I remember, I was in GST, many people were finding it difficult to take the credit in the first year. 16.4 says, saying that the due date for filing of return for the September. If you remember 17, 18, we have extended, even though it was, October 2018, we have extended it up to till end of March 2019. I hope you remember that. But now if you see, many of the people got streamlined, most of them will take the credit prior to end of the due date that is been given now. Like that, ITC, I know, has been a subject which is of continuous dialogues between department and the taxpayers. And we have been listening, sections have been amended. Amending a section in GST was unlike CBSE time where you can amend through, budget. Now, if you want to make an amendment, it has to be discussed in law committee, then it has to go to the council. After council approves, CGST can be amended, but you have to wait for all states to pass to amend an act. Such a difficult thing. Even then, the government has been doing. Let me just say 1 or 2 words about the export refund, because that's also part of the panel discussion. If you have seen that export refund, IGST refund, if you take, IGST refund is nothing but the shipping bill you claim. You don't have to file another refund claim. The way GST has been operating, I need not say, I would better listen from you and say, the way it has been operating GST, extremely good, and people just do their job, file their shipping bill, automatically the refund is coming to the credit. Imagine, you don't have to file another application. The very shipping bill is treated as your refund application we have been getting. And the time limit is 60 days. Can you imagine? Within 60 days, the refund is supposed to come to you. If at all it doesn't come, government has committed that we'll pay interest at the rate of 6%. Of course, it's out of any order of any appellate tribunal or appellate commissionerate, then 9% interest we are ready to pay to you, if at all it is delayed. and my officers have been given, and CBSE member is also here. They have been CBSE has been continuously monitoring to a large extent. Within 45 days it is being paid, and some probably up to the 60th day. Of course, government also has to take care of, wrong ineligible credit. You must be taken note from 1st January 2021, validated bank account linked to PAN and Aadhaar is only being utilized for crediting of the refunds. These are my few thoughts I thought I will just share before the panel discussion starts. I know when industry speaks, it is like, 85% glass is filled up. We should also mention that 85% is filled up. Of course, that doesn't mean say that government has stopped doing the reforms. Government is still working on this 15% which you are. There's nothing called, agenda is never gets finished. An agenda is a continuous process because, the journey is endless. We may be there, we may not be there, but the government coming forward to 2 steps to shake hand with you. I'm very sure you should also come forward 3 steps to shake hand with the government, because ultimate aim is to make India economic superpower and 5 trillion economy. Thank you for giving this opportunity to say London.
Mr. Rahman, ye kya hai na, ye dil mange more. So this panel is going to talk about the mange more part a little bit. I'm going to start off by asking our panel members, and we've got a structured agenda, but possibly I can start off with Mr. Agarwal. Give me a perspective about the ITC, let's say, incremental to-dos that you would want to give. I mean, Mr. Agarwal is tax head of BMW, but I mean, why don't we just talk about that a little bit, and then we can ask you.
So, good morning, everyone. First of all, I would like to recognize that a lot is already done in this regard in the last some years. As we already heard this morning that where we started this journey and where we are now. So there were a lot of changes already introduced which have supported in taking the seamless credit in the businesses. Also dealing with the one authority versus earlier we were using so many tax authorities for state taxes, etc. And this has also gone out. So these are the steps which have helped a lot. And I must share with you one thought. When we have investment reviews from our parent companies, and when we talk about tax structures in India, it is quite encouraging, and it helped a lot in convincing the our partners that they must invest more in India. So be it in electric car technology or in other areas of the industry, people are quite open because of the open tax policies of the India. And I would like to thank to the government for coming forward and assisting us. Also, I would like to share that whenever we had we had a confusion, or we wanted to take clarity in terms of certain provisions of law, we were given an opportunity to come over, whether it is to Ministry of Finance or to the GST offices, and the officers always entertained us. They tried to provide solutions, if not to all, but to many of them. I would say, that is also quite encouraging, as Mr. Rahman was saying just now, that industry should come forward and, ask government, help government. So unless we go there and put our perspective with them, it would be, it would not be possible to get the clarities on the issues. So I would say a lot is already done. But still, there are some areas where we can achieve more efficiencies in the system, because the industry needs clarity and certainty on the taxes. Nobody would mind pay taxes unless there is a absolute certainty. So one of the example which I would like to mention, that there are certain areas where ITC can still be explored. Because the basic purpose of ITC is that it should be available on the products which are used in the furtherance of business. So there are some items, and I would just like to mention a couple of them in general. For example, the goods or the products used furtherance for furtherance of business. For example, there are products which are used by the companies for themselves. For example, the cars used by the company for marketing activities. On them, the ITCs is still not available. There are certain rulings, but again, there are contradictory rulings in that regard. That's one. There could be, similarly, other such things like, ISD versus cross charge. That is also one of the area where the industry is facing a lot of challenges. So I think maybe we can get some views around it.
You want to talk about it now on, so basically two things, sir. I mean, to my mind, to get to the India's, let's say, 5 and 30 trillion dream, removal of cascading or mitigating of the cascading impact in the economy, I think is important. At a conceptual level, while of course there are structural issues with petroleum products outside and so on and so forth, that I think as a agenda point is already there in place, okay, before the overall entire polity, and you're right, before the council. But also it's important that there are some legacy, let's say, denials of credit or restrictions of credit that have come from the earlier regime, which are uncalled for. A lot of it is also kind of come in terms of restrictions because of the fear of abuse, while I think everybody recognizes that there are obviously, these are all input services being used by the companies for businesses. People used to feel, I mean, the policymakers might be feeling about the abuse, but now with the present technological prowess that the government has, the administration has, there is definite merit in kind of expanding this and mitigating this cascading impact. You've kind of addressed a part of it by, let's say, amending inverted duty refunds. You've addressed a little bit in relation to possibly giving some bit of clarity on some of the matters. But one is expanding the credit ambit, okay, and removing this, I mean, these restrictions related to personal expenses, related to construction, especially now with, the construction rate going to 18%, and then denying, a real estate, denial of credit on the real estate, I think will create humongous amount of cascading impact, okay? And what are you guys thinking about that, if I can ask?
I think the issue with regard to block credits under Section 17(5) has been engaging our attention for quite some time. The industry also has been making representations on that. If you look at one of the amendments, what we have carried out, of course, the recommendations which we made and the council has approved it, is with regard to the proviso where we had provided in 17(5). If a particular service is provided in terms of a regulatory requirement, I think the restrictions will not apply. For example, we had issues relating to rent-a-cab, we had issues relating to the group mediclaim, and also we had issues with regard to, for example, canteen services, etc. In 17, we have also provided in the same line of business, these restrictions will not apply in the sense that in case if it is a rent-a-car operator, I think taking the credit on assets like motor vehicles is not an issue. The journey has been to look at some of those block credits and unblock them, and also take due note of the fact that we have evolved over a period of time. I think the matters where still a consensus will have to be arrived at with regard to the inputs or input services which are predominantly of a personal consumption. I think that's one area where we would like to look at it. Of course, the second area which Mr. Premprikar has said about with regard to the works contract, and particularly when the structures are being put into use which provide for output services in terms of renting, etc., etc. We do have a couple of judgments in this matter. The government has examined them, and they are, of course, being looked into from a wider perspective. I think Rahman mentioned to all of you with regard to the cash credit ratio in the current regime. let me tell you, I think the percentage of the input tax offset against the output tax liability compared to the pre-GST regime has gone up. For every 1 rupee what we collect in cash, I think close to almost about, what do I say? Out of 1 rupee we collect close to almost about 79-80 paise is offset through the input tax credit liability. What we collect is less than about 20% of the total liability in terms of the cash revenue collection. Notwithstanding that, I think what we are certainly looking into is those difficulties which the industry has been expressing with regard to 17.5 block credits are constantly on review. We have been working towards that. I think as we go forward, I think whether the input service could be extended or not in terms of the worst contract service tax paid, or also some of those block credits which are otherwise causing huge cascading in terms of the automobiles, what Mr. Goel has mentioned about. We would take it further and examine it and place it before the council for an appropriate direction. Yeah, thank you.
Just one more aspect, which is an important aspect that Sanjeev picked up, is this entire, let's say, confusion on IST and cross-charge. I mean, this is a very important matter primarily because it's not related to actually any tax evasion or anything of that sort. It is basically people trying to grapple with the overall complexity in the legislation, and people taking interpretational calls on this. Anyway, I think the primary reason to kind of get in a ISD or a cross charge was to allow people to transfer credits from one state to another. Okay, and this avenue was kind of put in place. It's actually creating more of a problem than otherwise. Is there any thinking on that front on how to kind of handle this? Because this, I mean, I can say one thing, sir, that there is going to be a tsunami of litigation on this particular aspect, the way we kind of see it.
I think one thing all of us has to keep it in mind in GST is that there has to be something called a principle of equivalence between the goods and services. Insofar as the goods are concerned, let us look at exactly how we were dealing with that in the pre-GST era. We used to have a stock transfer, consignment sale, and different type of forms by which the products being shifted from one jurisdiction to another, and in that process, I think you levied a non-vatable central tax, which remained as a cost, and also procedural cumbersome processes. Now, we have to a large extent addressed it by taking them as the transaction happening even without a consideration as a deemed supply under Schedule 1 to the GST Act. Now, we have also gone ahead and clarified that the valuation will be completely a transaction value between the two parties, notwithstanding the related party. I think till now on goods part of it, I think by and large, I think there are no issues and there are no disputes. I think I would like to be told in case there are challenges with regard to the related party transactions in terms of the transfer of goods are concerned. I think that's well settled. Now comes the question of services. Now when it comes to the question of services, now all of us had a comfort prior to GST in terms of a centralized registration where you could have the registration in a centralized manner obtained, could take all the input service credit and distribute it to the different registrations in different states should they choose to not have a centralized registration in terms of IST. IST and GST has also been envisaged for only distributing credit in terms of the input services. Now, the question comes is that can there be in a subnational level taxation not to take cognizance of the value addition happening between the group entities or the related party cutting across the tax jurisdiction in more than one state? I think in the initial period there was some confusions, we are aware of it, and the industry adopted different practices. Some of them allocated the cost, some of them did not allocate the cost, some of them who otherwise could have taken in the IST route did not do it because some of them chose that it is optional and it is not mandatory, and there are issues on this. The question is that if you look at the provisions of section 16, one of the conditions for availing the input tax credit is that you have to be actually in receipt of goods or services. And if those registrants in a state located are not actually receipt of service, I think the entitlement to credit itself will not be available to them. Now, There are extreme situations also, we are consciously aware, particularly on the burning issue with regard to employee allocation cost and etc. But insofar as the head office, branch office expenses cross-charged, insofar as the allocation of expenses have happened, I think it has to be followed by a tax invoice in terms of transferring that cost to the registrant unit where credit could flow on this. Just keep this in mind that in terms of goods, we don't come across a challenge. In services, there are issues on which probably services being very intangible in nature. I think different practices have been followed. A circular was attempted somewhere in August 2019 to provide a solution to some of those issues. There were no consensus with regard to the proposed model which we brought in before the GST Council. Some of the states had some concern. And then we were taken the issue back to the drawing board. We have been deliberating on this. The law committee has discussed this time and again. And we are more or less ready with some sort of a broad contours by which those expenses between the branch and head office will have to be treated for the purpose of tax purposes. Let us wait for that proposal to be examined and council decision on that, consequent to which I'm sure we will be coming out with a circular of a clarificatory nature addressing some of the concerns. But please keep this in mind that in terms of registration in respect of a particular state, the services, unless they are received, probably the credit would not be available. The only alternative will be, I think, to do the ISD route. We have looking into various modalities and we have been taking the inputs from the industry and the concerned stakeholders, and certainly we will look upon addressing them in the days to come. But that is a work in progress. We need to address that in a comprehensive manner. Thank you.
Sir, in the meantime, is it possible to issue some guidelines to the commissioners?
So the problem is that
because
there is a, there is a decent amount of, let's say, lack of clarity. Obviously at the ground level, officers are going about trying to kind of give their perspective and doing investigations and audits and so on and so forth. Till the time clarity emerges, okay, I think can some instructions go to kind of reduce the friction? That is one. The second is that as and when we get clarity, let people be allowed to kind of rectify the mistakes on a retrospective basis, because otherwise the punitive measures with no fault, okay, will come in. So I think both these, if we can, that's what you wanted to say, right?
Well, I think I will only say that this is before the GST Council, it has to be taken. As I told you, the law committee has discussed it. There is some broad consensus, but that has to be placed before the GST Council for an approval. There could be changes in the way in which the law committee has recommended or the GST Council may take a view, but that's not what I'm going to say. But look, some of the decisions taken by the GST Council in the past, for example, we were grappling with the issue with regards to gross tax liability and the net tax liability on interest. The GST Council took a decision. Thereafterwards, it retrospectively given the interpretation from 1st July 2017. Yes, we have provided for that. Now, insofar as this issue of the cross charge or cost allocation is concerned, I think first and foremost we have to arrive at sort of a clarification which would set at rest some of those concerns which the industry has been expressing. Now, with regard to the past period, yes, we are aware of the fact that this is an issue which had been engaging the attention of the council way back in 2019. As and when the decision is taken, perhaps I think that could also be addressed by the GST Council. But in the meantime, I think we have been also internally looking into, insofar as some of those enforcement actions are concerned, we have been advising our jurisdictional officers to await for some of those contentious issues not to be taken a precipitative measure. But scrutiny and audit are on way, but we are hoping that a quick, clarification comes on the matter in the days to come, and thereafter we will be in a position to do. But until a decision is taken, it would be not proper on our part to stop an ongoing process. It's an interpretative matter. We are in the process.
Mr. Goel, would you want to pick up on export refunds and any other matter that you want to pick up on, I mean, in general?
Thanks. I would first like to make very briefly 2 points on ITC. First, we are extremely grateful to the government and government officials for introducing this concept of IGST. Sir, otherwise the industry was facing a big apprehension before it was launched that what would happen to the local purchase because, and I would say a very innovative way of clearing house between the state government so that you have isolated the pain from the industry and you took yourself. To me, I do not know how many have realized, but that has a big boon to the industry. The second point, sir, on ITC, where there is some section of the SSE who feel even if the supplier has not paid, it should not be their problem and they should be allowed credit. I fully understand government's view and very reasonable that unless the supplier has paid, the purchaser should not be allowed to take credit. However, to make it happen, because today, with all good intention, the buyer doesn't have the control on the seller. Whether he has paid or not paid, it comes to know after 2 months, 3 months, and it's beyond his control to pay. At the same time, the government should not allow the input credit if that fellow has not paid. So some technological intervention, like 1 or 2 points which I can suggest, like earlier you planned of what we say locking of the invoice. As soon as the seller has raised the now e-invoice, if the purchaser accept that and get locked so that afterwards she doesn't have the discretion of not uploading. So at least we are sure that this invoice is a genuine invoice. Or even maybe one step further, like what we call earlier PLA system, or now in banking we have RTGS. So let there be an option of advance payment by the supplier and it's online. Whatever the invoices are issued can get debited, whatever the input credit comes, get debited. It's an online dynamic account. And it can be optional so that at least the supplier knows that if the person is there, I know very well there is no question of the fraud. As far as the third point, what you want export refund, we are extremely happy with online processing. We are able to get the credit on time. Yes, there is some process, but that we understand. Thank you.
I think this issue with regard to the recipient being put to additional obligation vis-a-vis the supplier in terms of eligibility to the credit has been one of the issues time and again raised by the industry, and the government is aware of the issues. The one what we have said, I think insofar as the GST mechanism is concerned, I think invoice matching becomes the heart of the core of the GST in terms of the input as credit. For whatever reasons, we couldn't implement that 1, 2, 3 model, and then we went for a summary return. And there started the issue with regard to the mismatch issues, etc., etc. Now, what have we done? I think over a period of time, if you look at the amendments what we have carried out, we introduced 43A, and through which we said that the recovery proceedings could be initiated from the supplier if he is found, and if he is not found, the recipient could be proceeded with. And of course, the 48.4, we could not implement it for whatever the issues which we had faced in terms of the technology. But if the recent amendments which have been carried out post-October 2020, and particularly the Finance Act 2021 and 22, we are moving towards a direction by which the supplier has been made, I think, more disciplined in terms of uploading his outward supply statement. After all, the credit in the GST system gets generated from where? From the outward supply statement uploaded by the taxpayer in the tax system. If that person can be disciplined in terms of uploading the return only on filing the liability return in the form of a 3B, I think to a large extent we have addressed that concern. Now, to start with, from August 2020, we have moved in the auto-populated 2B statement to a recipient to be C as to what the credit, which is clearly admissible to him in terms of the supplier's upload obligations. We started with that. The 2A, which is to be dynamic, we have locked it with 2B to say it clearly on a particular month for the tax period for which your credit can be absolutely safe, and there is no doubt on that. Second, we have said that the sequential filing which was not there in terms of the R1, we have brought into the record. today, as on today, unless you file the previous month's 3B, you cannot file the R1. Now going forward from 1st January 2023, it would be a simultaneous filing. If you don't file an R1, you can't file your 3B for that month. Now, these are the measures by which the supply side discipline will happen. Now, insofar as the ask of the industry that credit should be allowed without a supplier uploading the return and without the supplier paying the tax, I think that is something not the government will be willing to do it. I think our experience in the last 2 years, you see, how did we achieve the discipline in terms of the return filing, in terms of the tax buoyancy? If you look at the growth of the GST revenue, I think a lot more happened in terms of the structural correction and the efficiency in terms of the disciplining the tax payments from the taxpayers is concerned. We have a long way to go in further plugging the loopholes in the B2C transactions. We are looking at it. But on a B2B, I think we have taken a lot of steps. One, we blocked the e-way generation for 2 months beyond goods supplier, but the service suppliers were going without the same type of a restriction. We brought in the sequential filing. It's nobody's case that he will file an R1, an outward liability, and he will not own up the liability and pay the tax. We brought in the amendment under section 75(12). We said that the moment you file an outward supply statement, I don't have to issue a notice and go through the proceedings for the purpose of recovering the tax. I would consider that as self-assessed tax liability and proceed sideways for recovery. But in spite of all these things, we are also consciously aware of the fact that the eligibility to the credit in a particular tax period vis-a-vis the actual invoices generated, could there be a mismatch? For example, if an invoice could be generated on 28th or 29th of the month, but the recipient side would not have received the goods in that tax period for which the credit can be legitimately said to be eligible, it can spill over to the next month. We are aware of that. We are trying to bring in some changes in the GSTR1 and also make 3B little more auto-populated from R1 to ensure that the credit flow is secured for the recipient side. But it will take some time. We have taken the approval from the GST Council in the last meeting for bringing improvements in the R3B, and that will be put in the public domain for wider consultation, and you can give your views. But going forward, I would only look upon that unless the supplier uploads the return and paid the tax, I think the credit at the recipient end may not be a thing which we should look at it. I think in future going forward, we have stabilized that system, and we had come across a lot of difficulties, but today we have completely automated it. I think probably between the supplier and the recipient side dynamics will have to be done. There are challenges, but compliance rating and other issues are being discussed. We will look forward, but not the way in which we will look upon a tax credit to be taken without the corresponding tax being remitted to the government from the supplier side. We would definitely put upon more discipline on the supplier to see that the credit of the recipient is not at difficulties. Thank you.
If I can supplement what member has mentioned, in GST there is a provision also that they have made that you will be able to communicate with your supplier. Any recipient would be able to send messages and get in touch with him to ensure that the tax credit that you are taking, his tax has been discharged by him. In fact, I will just say generalistic manner, all over the world, the tax department only plays the role to the extent of information being made available to you. You will have to take a call whether to take credit or not. You will have to take a call to see whether your supplier had discharged tax or not. The responsibility of the government ends where it makes the information available to you. That is the reason, as I already mentioned to you, in this Finance Act, the section itself has been amended, 41 section, to make it mandatory for you to ensure that you take the credit only if your supplier pays. By any chance, if you take credit, then you can reverse and wait for his payment. Once he pays, then you can take. In fact, in GSTR 2A, the one that gets populated is a dynamic statement. As on the date of 13th, when you are taking the credit, you can know to what extent he has paid. When you file your GSTR 3B on 20th, just on 19th, you can see GSTR 2A once again, just to see whether he has paid the tax or not. So I thought steps are being taken as member has mentioned, and I thought I'll just supplement to you. Thank you.
No, thanks a lot. Okay, I just one issue on the export refund bit. I know you have to leave, and then I'll let Pramod also take this. So, just one thing on the export refund side, there is significant restriction to go for rebate option just because we have taken some exemptions on capital goods and so on and so forth. There is no other option to get refund on the capital goods. I think that needs to be addressed for exporters. Okay, and to my mind, that's something that maybe can be tabled on the export refunds.
I think insofar as the input tax credit availed on capital goods are concerned, if you are predominantly making supplies of zero-rated supplier exports, I think IGST payment route provides for using the credit on capital goods. It's only on ITC accumulated credit in terms of the refund on LUT procedure of exports. I think the credit restriction is there applicable to only inputs and input services. The IGST refund route still provides for you to encash the tax paid on capital goods. That's available to you. The other aspect what you have talked about with regard to if you avail certain benefits and schemes and you have opted for an IGST which did not permit you to avail those schemes, perhaps I think you are talking about the restrictions what we placed in 9610. In this GST Council decision, we have taken approval from the Council that wherever such tax as stand paid back to the government and the interest stands paid, the credit restoration has been allowed. I think a separate workflow in terms of PMT 03 has been evolved. GST is ready with the utility. I think the moment the GST Council is notified, I think some of you who have paid back the tax along with interest, you will get the recredit of the credit which has been utilized for payment of that IGST. But in all these matters, I think refund, I would like to reiterate that while we have made every process automatic and system driven, the business rules governing the refund will have to be carefully looked into before you make a claim. We have provided alternative routes. For example, the IGST route is an automated route through which an end-to-end process is automated like what Kader has said. But it has certain limitations in terms of the export benefits what you avail. In terms of ITC accumulation, you have a jurisdictional authority who will process it, but it is something which comes without much of this restriction like what has been put in 9610, etc., etc. Now, the question is that you need to choose your option very carefully, but on the refunds, I think in an overall experience, I will say, I don't know, some of you had experienced the refund issues in the pre-GST in terms of service exports vis-a-vis today, and I'm sure, I think Pramod and all others would definitely look into and say, I think the process has been by and large simplified, and those issues with regard to the eligibility of the credit which used to be questioned at the time of processing an export refund is a thing of past today. Yeah.
Pramod, your turn.
Thank you, Uday. So while most of the other issues on blocked credits and accumulated credits have already been covered, maybe just one thought on how can we make this unlocking the working capital, maybe it could be more like an innovative or a path-breaking solution, could be around the tradable scripts. And sir, I know it might be repetition in front of you, but this tradable script, the concept that we have been representing is where a person who is sitting on accumulated credit or a person who has a situation of seeking a refund on account of exports or inverted duty structures, they convert those credits into tradable scripts, and we allow an active trading in those scripts through the BSE NSE platform, and these securities are dematerialized in NSDL CDSL platform. So this unblocks the working capital and also reduces the huge pressure on the government, which, you know, in processing the refund applications and all. Anyway, it will be part of the audit procedure whether the credit conversion was legitimate or not. Second benefit, it allows the scripts. Today, while the government on one hand is pushing the credit and there is not much of the uptake, and the reasons are obvious that banks are still reluctant to give to the MSMEs unless there is a tangible security or collateral. These securities can also be used as a collateral to borrow from the banks, because 18% is a huge blockage of working capital for a lot of companies, small and medium. Now the other thing was on currently there is this unilateral credit note posting possible, where once a transaction of sale and purchase has been completed, the supplier can go and post a unilateral credit note without the knowledge of the recipient. And then later on it shows up as a mismatch. Now the transaction has been completed, the goods have been received, payments have been made, but the supplier posts a credit note as it tantamounts to some sort of a fraud with the revenue, where credit has been taken away, and this recipient, because they never received the commercial credit note, they never reversed it. So a sort of where the recipient should accept the credit note before it moves any further. So that could also be looked at, and you know, we had mentioned it to GSTN also. So these were the two thoughts, sir. We'll just thought we'll place it before you.
Pramod, we are aware of the issue what industry has been facing with regard to some of the cash flow with regard to input tax credit, particularly those who have been dealing with inverted rate structure and also do not have a substantial proportion of the zero rated supplies or exports. This is an issue which we need to look at very carefully. You talked about the fungibility of the credit in terms of making it scripts and then make the liquidity issue much easier. There are also demands that the electronic credit ledger from one registrant to another registrant in a different state using the distinct person concept could be transferred and to make it usable in a jurisdiction where there is a liability arises. These are issues which are under examination, but I won't say that this is under active consideration of the government. To start with the electronic cash ledger, in terms of the CGST is concerned, we have made it transferable from one cash ledger to another cash ledger across the states. Between the tax heads, the cash ledger, we have allowed the transfer to start with about 2 years back. We are aware of the industry's concern. Probably, I think the proposal to convert the accumulated ITC into scripts and make it tradable scripts, we would have to wait for some more time. India is a complex country. For every legitimate business which wants to do business in terms of the compliance to the law, there are also equal number of persons who would like to game the system. I think my colleague Kader has mentioned about the fake invoice and the circular trading problem which has been faced by us. Thanks to tech technology, we could detect them and deter them by stringent action in the very beginning. Otherwise could have eaten into the vitals of the good gains what we have got in the GST. The proposal from an industry perspective is well justified, but we need to take cautious steps on that. Insofar as the fungibility of the credit in terms of transfer from one GSTN to another GSTN of the same PAN, there are issues with regard to fund settlement whenever such credit is offset against the liability. While we have no issue insofar as center is concerned between the CGST to CGST fungibility, but when an IGST credit is being used basically for the purpose of SGST and CGST, there could be challenges. We need to take all the stakeholders on board before we go ahead and arrive at a decision, but the point is noted. Thank you.
If I can just supplement, sir. If I can just supplement, please understand that the difference between pre-GST and post-GST, all states are involved. Member has just mentioned, states get their revenues with respect to the ITC as well as with respect to the, cash that has been used for payment of taxes. So what you are trying to make again is what in the pre-GST era of, service tax and the central excise, which states may not accept. And with lot of difficulty, GST has come in, very well convincing the big, I have been in GST council, I know the difficulties dealing with states. It's very, very difficult to convince any such centralized area of transfer of, credit, like a script. The experience that even CBSE had, I'm very sure it must be fresh in your minds about DPP scripts and DEC advanced notice script, where it was made transferable. Lot of difficulties we have faced. And the second aspect, sir, if you permit, I'll just supplement. He has mentioned about that unilateral credit note being issued by the supplier. Sir, once you have issued an e-invoice, even the credit note will have to be also through e-invoice. So once it gets notified, I am very sure recipient would be aware of such credit note being issued, especially if it's a commercial credit note. Anyway, as member mentioned, I think it would be debated and considered. The sessions are welcome for the trade to give. Financial credit note if is raised by the supplier without affecting the tax elements which are already mentioned in the invoice, department as such is not into picture. But at the same time, recipient and the communication between recipient and the supplier would have to be strengthened. Thank you.
Okay. Thanks a lot, sir. I know that you need to leave. We have actually extended, and thanks a lot. We didn't get a chance from Q&A, but what we'll do is that whatever questions we get, we'll come back and kind of discuss with you. Thanks a lot, Mr. Rahman, sir. Thanks a lot, panelists, for being here. Thank you. I hope you had a good time. Thank you.
I request, I think any of my colleague and chairman, Mr. Vivek Johri will be there in the afternoon by 3 o'clock. I'm sure, I think, as much as I can clarify, he can clarify it better. Please reserve your question for him. I have a meeting by 12 o'clock. My apologies. Okay.
Thanks. Thank you.
I thank all panelists for sharing some extremely pertinent ideas and insight. Now we'll break for the tea. The next session starts at 12. Thank you. The tea is served in the same hall. Please join at 12. Thank you.
एक दो गिलास छोटे हुए हैं, ठीक है, ये सेट कर दीजिए सर, मैं बता रहा हूँ, ये 5 का बनाता हूँ। ये हटा दें, हैं? सेंटर में एक बैठा दे, सेंटर में एक बैठा दे, ठीक है, दो दो कर दे।
You all to please take your seats. We'll start the session anytime now. Now we'll move to the next session on tax technology. I would now invite to the dais Mr. Venkatesh Narayan, partner EY India, Mr. Sandeep Kumar, member Tax Policy, Central Board of Indirect Taxes and Customs, Ministry of Finance, Mr. Nirmal Kumar, Head of Technology, Goods and Service Tax Network, Mr. Ajay Agarwal, Tax Head, Vedanta Group, and Ms. Nisha Gupta, Tax Head, Honeywell India. I now request Mr. Narayan to start the session with the opening remarks, please. Thank you.
I don't need this. Good morning, ladies and gentlemen. My name is N. Venkatesh. I worked for the Indian Customs and Excise Service for about 24 years before taking retirement in 2013. And late after about a couple of years, I joined EY, where I presently work as the head of tax technology. And it's been, my privilege that I've seen technology evolve within tax, both from within the government as well as from outside. Just prior to retiring from the service, I had the opportunity of working, in the joint working group, which eventually, created this, what's called today the GSTN. And since that time, I think the one thing which became very clear was the fact that government was not reluctant to innovate. If today we are all reaping the benefits of, a very sound GST system, despite its complexities, I mean, dual GST is something that's almost unheard of elsewhere in the world. We are still doing well. I think technology has a very large part to play in that, as we heard in the morning from Mr. Nagendra Kumar. And like I said, I mean, the innovation started from creation of the council, where states and center came together. And then government had this idea of appointing a very eminent IT leader who was also heading the UIDAI at that point of time to look into the nitty-gritties of setting up a special purpose vehicle for, advancing technology in GST. And that's how GSTN, eventually came into existence. But that's not the only thing. You see, the whole idea was that, if you look at NIC is a very good organization. All of us, love the way they, they do work, especially the rural areas. But they are a government department. Here the idea was that we set up, a company that helps both taxpayers and the tax administrations and ensure that there is a certain professional level of service is delivered to all categories of users. So that's how GST took shape. Along with, I think, the creation of the organization, we saw the innovation in the government, when things started going wrong in July, especially on GSTR 2, they had the courage of conviction to defer some of the things to a later point of time and just start with GSTR 3B. So this also represented another phase of the government in innovation. Very importantly, I think GSTN also brought in a lot of tech innovations. To begin with, this concept of the GSPs, which became a partner ecosystem for the GSTN, and thereby farming out the load and handling many of the first level user issues, that came into existence. Then we had the IRP for creation of the e-invoices. For the first time, a government department started working on APIs. I mean, hitherto it was mostly web uploads and people logging into the websites and working. But the first time, a seamless end-to-end connectivity with the taxpayer systems was established through the use of APIs and JSONs, keeping aside the heavy XMLs. So with this, I think over the last few years, we have seen a maturing of the processes. We have talked about, the collections going up from 1.44 lakh crores or so. And all this happened largely because of the fact that the very strong, technology that's underpinning everything. So with this in mind, we are here to talk about, two broad things. One, the roadmap, of technology in the GST era, as well as, how companies can leverage technology, and optimize the tax function. So I have on the dais a very distinguished panel. Let me first introduce to you Mr. Sandeep Kumar. He's member tax policy. I've known Mr. Kumar now for decades. He's a 1987 batch officer, extremely distinguished. Has held various, portfolios across customs, NCB. He has worked in our mission in Hong Kong, and till recently he was also the member IT and principal DG, in systems in CBIC. He also has the distinction of setting up the Director General of Analytics and Risk Management in CBIC, which has emerged as a pivotal organization for data analytics, and enforcement. So Sandeep Kumar sir here will be talking about, how the digital tax administration has, evolved over time, and especially with reference to the GST. I also have Mr. Ajay Agarwal, who heads tax in the Vedanta Group, and Ms. Nisha Gupta, who is the head of tax in India, as well as the global tax head for transfer pricing in Honeywell. So these two distinguished delegates will be sharing the experiences, of the GST journey and what they would expect from the government and GST in terms of, what technology can be offered to the taxpayers. And lastly, I have Mr. Nirmal Kumar, who heads the application development in GSTN. First hand, he's there to answer all your questions about GSTN's activities, and what you can expect from GSTN in the times to come. So without any further ado, Sandeep Kumar sir, over to you.
So Venkatesh, thank you very much for the introduction. You have been an old colleague, so I think you have been extra nice while introducing me. Thank you very much. My thanks to CII for joining in the 5th anniversary celebrations, as I say. It's a huge milestone. Last year, when we came to the 4th one, whatever we did had to be done virtually. We all know we were going through a very tough time because of the pandemic. Thankfully, this time we are able to meet physically. We were very happy to have a large function in Vigyan Bhavan on the 1st, and that had also seen a wide participation from the industry. In fact, from Maruti, we have Mr. Goel, I think. Is that right? He was there and he gave a very nice presentation, and so did other 4 industry leaders also give a presentation in terms of what GST has done for them. It was very exhilarating, very satisfying, and I think the compliments that the industry and the tax administration got from Finance Minister still ringing in my ears. It was really a very nice function, and there was a lot of feel-good factor about it. During that session, Finance Minister also recalled the journey of the digital side of GST, and she has in fact led from the front in terms of the initial glitches that came into the system. Maybe I think part was also due to lack of familiarity. I never forget that when I was first accosted with a Mac computer 15 years ago, I've always been a very IT savvy person. I did not know where to get that machine switched on from. So if you're simply unfamiliar with something, you sometimes tend to criticize it. It's actually not bad, we have to get used to it. So there might have been some friction because of user discomfort, some technological issues, which of course with the leadership of the Honorable Finance Minister were resolved very well. And I think from 2018-19 onwards is just simply been looking up and better. And I also say that large part is owed to the fact that, wherever our service officers go, they make a tectonic difference. We have acting CEO Manish Sinha there, who's also an ex-service officer like Venkatesh. I think he brought in a lot of navigation skills. He had been earlier a JS in TRU and long experience in the board. And I think we saw all those improvements and better results which are bearing fruit today. On many of the initiatives that are going to come forth now, we have a representative from GSTN. We have, of course, Venkatesh to give you first-hand experience as a user and intermediary. So I'm not going to go into that particular aspect. I'll leave that a very lively discussion between the panelists and yourself for later. But I just want to spend a minute or two trying to give you perspective about what a digital revolution is all about. So I'm sorry, you might find it entertaining or you might find it boring, but I'm going to take you back say about, 12 or 15 years ago, which I effectively say is the beginning of the digital revolution, or what people call Industry 4.0. And just think what life was before that, what life is now, and how quickly we get used to certain new tools in the digital environment, or a new technology. And once we are used to it, we are certainly expecting more, ye dil mange more. So please look at this, that in February of 2005, YouTube was launched. In 2007, they actually started live streaming. And from the time that YouTube started live streaming, see the deep impact that it has had in the manner that we view content. Earlier TV, we were captive audience. Today, of course, OTT platforms or whatever, variety of things and options that you exercise. It's video on demand. And video on demand from YouTube started actually in 2007, which is just 15 years ago. And I think all the people sitting in this hall are of that generation where you have seen all these things happen. And similarly, all this Netflix and everything that we see today, it's actually based somewhere on that live streaming technology which came. So it made a tectonic difference to way I would, if I have a problem, I still go on the YouTube and say that how do I solve this? I ask that question, and YouTube will actually probably give me a host of 20 videos which are problem solving, from fixing an aqua guard to a car. So your education, your news, your entertainment, entire life has changed with video on demand and online streaming. Then this was 2005, 2007. Please look at 2006, birth of social media. You've all seen the movie of Mark Zuckerberg, I'm sure. Facebook came in 2006 and Twitter came. Now please see how we are communicating with each other. Earlier there was just the newspaper, and now you turn around and tweet. Suddenly it's become a trending tweet. Lot of taxpayers actually tweet to the finance minister when they have some angst about anything. So in the administration, I had to, I would say that all of us had to adapt to an entirely new channel of airing of grievances. Earlier one was used to receiving a letter, and in a government office you would get a dark pad. Or you then certainly got used to receiving emails. And now we certainly had this situation where a grievance was being aired, then it was trending, and then everybody was seeing it. And the pressure for solving a problem is absolutely immense. So I think that social media, in terms of peer-to-peer communication, instead of highlighting issues, airing your grievances and angst, it changed the world. And then look at the fact that Amazon's Kindle came in 2007. And once Kindle came, you could actually download it on a phone, and your reading habits have changed. Today you don't order newspapers, you subscribe. I sometimes look at the bill of various subscriptions that I have of national, international magazines. I start getting worried that, I never had this particular expense in my basket. But earlier it was all free. Now everybody says pay 50 rupees a month, and from business standard to everybody else is now Indian Express says 2 rupees a day. You certainly keep on subscribing if you want digital content. But the fact that I am today reading my books on my phone or using an iPad or a Kindle, it's become the way of life. My visit to the bookstore has stopped. It has changed life for all of us. And of course, I think the greatest innovation was the smartphones, starting with Apple's in 2007. And that just changed the way in which we are looking at everything, looking at websites on our phones. And this whole concept of mobile telephony really took off from there. So Google launched the Android phone, which many of you may be using, in 2008. You message only using WhatsApp in India because, maybe sometimes signal lets you down, you even make WhatsApp calls. And Truecaller that you use to handle your spam, they're all 2008 and 2009. That is, at least to an old man like me, that just seems like yesterday. So you look at how our world has changed in communication. You look at the fact of how we travel. Travel agents as an industry has been, I think, quite adversely affected when Make My Trip and everything else came. So you're booking online. You don't actually go and hunt for hotels. You use Airbnb to book yourself very exotic places and very wonderful places to stay. So the way we travel, the way we stay, and look at taxis. Uber came in again, I think in 2009 probably. And it's been a birth of an entirely new industry, I would say, with Uber. So there's a technological advancement, and the fact that how the economy changes because of this digitalization is something really, as a lesson, I can transpose that to GST, and I'll just bring you there. All these, the application of digital technologies to a very core way of doing things fundamentally changes the way you trade, the way businesses are organized, the way the economy is organized. If you see this process, I can also say that it is a process of disintermediation also. Certainly the middleman is disappearing. So companies are, looking at direct marketing, direct selling, the entire e-commerce concept, if you see. So there are very tectonic changes that come about in the industry. If you look at, our taxi hailing services like Uber, how fundamentally it changed the market. You certainly have a new way of hailing cabs. You have a new way of paying the cab driver. In India, we could have never thought that we would use actually a credit card or an online system. And today, those who are not on the platform, you can still use a Paytm or a UPI and pay a taxi driver or even at a pawn shop. So the digitalization in the Indian context, which has, I would say, started by and large from 14 or 15, has brought, it's a point of inflection. Like 2005, 6, 7, 8 was in globally speaking, and I've highlighted all these things that happened during that time. 14, 15, with the digitalization that our government, launched in a most aggressive manner, is a point of inflection for India. And 2017, when GST came, I say government at that time was the biggest innovative disruptor by bringing in that tax. It just changed the tax administration. It changed the interaction between the taxpayer and the government. It brought in this concept of facelessness. The entire processes became on a particular platform. You had a uniform rate of taxation across the country. You had a portal which looked the same whether you were in Kerala or you were in Delhi. It's a really huge change. And I think that this change, the biggest things that it has brought was if you look back and think, because like I made you think about, life before a mobile phone. If you look back and think, you remember C-forms, you remember the concept of service tax and central excise, and which credit was interchangeable, what was not. You remember all those things, and you see now how seamless that credit flows. You don't have to be hunting for C-forms. There have been these other innovations, I think, and they're just about starting. The fact that e-invoicing has started, the fact that the e-way bill concept started, and we have intermediary service providers. I thought that having this concept of GSP was something very, very innovative. I think there are 72 or maybe more now, but 72 GSPs. They're building a huge amount of value-added services on their platforms for their clients. There has been other innovation, like, years ago when I had just about joined as Director General for Analytics and Risk Management Directorate, I was met by one of the GSPs who runs this app called Peridot. That was innovation. You could, as a customer, go somewhere, you get a bill, you put on your camera, you scan that number and it told you whether this particular person was authorized to collect tax or not. It was actually empowering the citizen. I don't know how well that app and that concept might be doing, but at least I spread it around in my family that this works. And sometimes children would, in the family, some nephew, niece would land up going to a food court, and there would be a bill with GST, and they would actually use that app to see that whether this guy can do or not, or maybe somebody in composition who was collecting GST. So, and people, then we started receiving, we built this concept that if somebody detects something which is not right, they could actually press a button and email that to us. So they were very tiny grievances, mostly in shopping malls and stuff like that, but it started happening. And another great thing which happened with all this digitalization, which I think I probably was able to leverage with my team and DG-I-Am massively, was the fact that we had data and we could play with data. And we started, this whole program of analytics, of trying to find high-risk taxpayers, looking at risky behavior, and so many things. And we were able to actually facelessly drive compliance from out of our office in Janpad Bhavan, in terms of actually not even knowing who the taxpayer was, but looking at that data and sending it to the concerned field formation, saying that, there are these issues which you want you to look. We also built an app. After you looked at this issue, please give me a feedback. So, we were doing some amount of machine learning those early days from the feedback that we were getting in terms of what we were targeting. And I think that with all the technological changes that have taken place in GST and in terms of, also policy, we were able to drive that you can default on your returns without a comeback, 6 months, brought it down 3 months, brought it down 2 months. The compliance has sort of hit really the ceiling, which is fantastic and very heartening. And obviously we are in a more compliant environment. The tax revenues, you have seen how they've been performing so well. Thankfully, economy has been performing well. But both these factors, good growth, good compliance, have contributed to excellent revenue, and that's all very heartening. And I think they are a direct outcome of this very digital environment that we've created. And already Venkatesh mentioned, and I also look forward to all these developments in terms of the fact that the API system started, and this is brought in these GSPs integrating with large companies, with their ERPs, which has considerably reduced the inconvenience and the burden of actually running how big your tax department was and how much time you take to for your compliance and your returns. So I think all these things are really taking us forward in the right direction. 17 and all digital platforms on all systems take a little time. It's really settled down well. We've been through this great point of inflection in India in terms of a digital tax administration, and I'm sure that industry is going to tremendously benefit from it. So with these few words, thank you very much for patiently listening, and I shall no longer stand in between the discussions, panel discussions. Thank you very much and have a very good session. Thank you.
Thank you very much, sir. In fact, the kind of journey that Mr. Sandeep Kumar talked about, in the evolution of, all the social media and smartphones and the way movie watching has changed. The same thing perhaps applies to your jobs. Look back 30 years. I mean, I have been in this for about 30 years or so. Tax used to be something that used to work on spreadsheets, right? And typically disconnected sources of data, and you had to make sense at the year end and how to compile it and give one aggregate reporting, whether it's an income tax or whether it's a monthly reporting for VAT or excise. And that's changed. Today you're in the middle of everything. You're there in the commercial process, issue of invoices, logistics, issue of e-bill. On the working capital, you're working with finance, you're working with risk management. So from being some kind of a corner office kind of this thing, you're now actually in the boardroom. And that's the kind of change that you have seen, technology bring about to the tax function. So perhaps this is the best time to start with Nisha and ask her, how a global group like Honeywell, with so much of complexity in processes and technology, managed to adapt itself, to this new regime. And what are the challenges that she faced as a tax head, while implementing the GST regime?
Thank you, Venkatesh. First of all, sir, congratulations for the 5-year anniversary. When I qualified as a chartered accountant two decades back, I inherited the VAT system, the excise and the complex system. We always lived in a paper era, which means tons and tons and tons of paper. So Honeywell almost 7-8 years back said that every office has to be spick and span, no paper. I went and told my country head, I said, look, I am a tax person, how can I go devoid of paper? My life is paper, I need a bigger storeroom than my office. Then came GST, which I called absolute reboot to regulations. The way we thought, the way we understood, we had to do a lot of unlearning to learn GST, but it has been welcoming. We had complex laws. I used to have 2 standard slides to tell my global CFO how complex world I live in. And then when GST was coming in, I said, oh, these are so many taxes now, they all converge into GST. So he said, oh, life will be simpler. That time in 2017, I told him, hopefully my life is simpler. But with every new legislation comes its own challenges. And I think we were all apt for it, but the way it came in as a jolt. We never got time. So I take care of a tax of a conglomerate which has multiple businesses, very different kind of businesses, and we have some like 100 odd systems that time. And can you imagine 100 odd systems? Making ERP changes with global instances came in a lot of work. In fact, in June 2017, after 3 years, I had to go on vacation. I called up Venkatesh, it is really coming. My children want me to go out. I can't go out because it is coming. He says, no, Nisha, this time it is coming. So you better cancel everything and you stay here. And luckily I did that. It requires a lot of work. It requires a lot of changes from because GST is a transaction tax. It's unlike any other taxes. Your systems have to undergo a change. There is no tax person who touches when procurement happens. So classically finance would hear purchase to procure, P2P or a C2C, customer to cash. No tax person touches the system. It is the people, the SAP users or the ERP users who actually touch the system. So that's how you have to make those changes. So which it makes it more complex in administration. Secondly, the more and more changes, sir, that you bring in, you need to give time to industry to adapt to changes. Because look, I'm on a global instance of ERP. I have my own security protocols, and after COVID, my security protocols have gone 10 times higher because of cyber crimes that we hear. And any simple change into the ERP requires a lot of back-end work. So that is not stopping. So we need to now, get that to a settlement level. Rate changes, position changes. If states want to take a different position as center, those also cause a lot of issues within the ERP, because you can't have a state-tuned ERP, right? You have to have a center, and then state books can't be done. You just have one solid books as an organization. You can't, if you have 23 states registrations, you can't have 23 books sitting there. So those are some fundamental changes. Technology helps you, but you need to be agile to make sure that you go up and make changes into your system so that each user understands and adapts to what is requirement under the regulation, is what I would say.
Thank you so much, Nisha. That was really enlightening. And perhaps, Ajay, you might have faced a similar story within a mega group like Vedanta. So at the end of all this, the kind of struggle that you have gone through, what are the kind of tangible benefits that you have seen that has accrued to you as a group?
Thanks, Venkatesh. And again, I want to thank the administration for seamless implementation of GST across the nation. Before I address the question which Venkatesh has raised, a few weeks back, I was just having a discussion with my daughter. She's 14 years old, and she asked me a very thought-provoking question. Let me put that before all of you. Has any one of you have heard of a concept called decentralized autonomous organization? So, in this room full of at least 150 people, chartered accountants, lawyer, 30 plus, 40 plus years of experience, administration, you name it, probably we will have all the experiences sitting in this room. To be honest, I could not answer that question like most of you. It's a sort of an organization, just like an LLP, private limited company, trust, sort of an organization which has been allowed in the US to be set up. It doesn't have any board, it doesn't have any kind of setup, it works on AL and MI. Point I'm trying to say, tax comes once the business is established, the complexity of the business starts, everything, and thereafter we really plug in the tax part of the business. Understand that if we don't even know how this decentralized, I continue to read this phrase, decentralized autonomous organization is going to function legally, globally in the world, how will we define how the tax is going to work? So the technology, the advent of technology is absolutely at the next level. Today, I don't tell my daughter and my son to really study math. I really tell them to really go and look up what's happening in YouTube in terms of technology. Be it coding, be it new entity setup, be it AI, ML, and many other things. And I'm a grand follower of Elon Musk, because he's the guy who's really changing the technology. We are just using the technology which is getting developed. Now let me address the question which Venkatesh has raised on adoption of technology in Vedanta Group. Clearly we are one of the beneficiary of early adoption of technology in GST insofar as Vedanta Group is concerned. We have operations all over India. We have complex entity structure. We have various businesses within the entity. We have multiple subsidiaries. We have entities above us. We have entity below us. You talk about it, you will have that complexity in Vedanta present. Now, apart from this complexity, we have another interesting complexity, which is certain businesses outside the purview of GST. Example, oil and gas business. So, unless and until we would have developed and introduced technology to GST platform for Vedanta, we would have been highly, highly unsuccessful. Thankfully, with the introduction and proper implementation of technology in Vedanta Group, we have not had too much of complexity in terms of complying with the legislation. I think Nisha talked about the too many frequent changes. Of course, when you use technology and when you integrate your entire platform of accounting with technology, GST is part of the entire finance mechanism, right? The moment a law changes, clearly you have to go call the software engineer, hardware engineer, and make sure that he plugs in the changes which has happened. And apart from that, we haven't had too much of issues. Let me talk about some of the advantages we have gathered out of GST implementation. We have become quite data intelligence. Why? Because there is one platform where most of our data resides. It is far better, to my mind, than our normal S4 HANA or Tally or any other software, SAP, whatever each of the businesses are using. I rely far more in GST returns which we have filed rather than our accounting system. Because to my mind, nobody would want to pay more taxes by filing excessive invoices. So that quality of data and mining of data has improved quite a lot in decision making. Integrity of data, like I said, it has improved significantly for me. I guess my CFO is also relying more on those data as opposed to data of the accounting. Now, there are certain disadvantages as well as we move forward with the implementation of technology in the GST regime. Nisha, like I said, too many frequent changes. We need to file GST1, we need to see 3B, there are 2B, there are so many forms, right? Now, with introduction of e-invoice, with the introduction of e-way bill, I'm not so sure. Our GST system is one of the best in the world, to be honest with you. Why do I need to file monthly and some annual returns? Because my entire tax payout happens based on GST1, 2B and 3B reconciliation. Entire data point is available with the department. It should auto-populate it and it should file it. Just like the way, today if you look at your income tax returns, department is sending you 26 AS and since last year they started sending you AIS. The moment your return do not talk to AS 26 AS or AIS, it will throw up differences. And you need to keep, telling government why there is a difference and how do you explain the difference. I think in the last 47th, GST Council meet, this issue has already been picked up, but I believe sooner it gets implemented purely from, AI and MLI perspective. I think that would really help the industry a lot in terms of, complying with all the tax provisions we have within GST law. So these are some of the words which I wanted to say, Venkatesh. Thank you.
Terrific, Ajay. In fact, it sort of indicates, the position of engineers like Nirmal and me in this room full of CAs and lawyers, that perhaps they have gone about the right way. Nirmal, maybe over to you. First of all, congrats for, the way GSTN has really, measured up over the last 5 years. Really, it's been, I think, one of the real pillars of how to make GST successful in any country. And now many countries are actually looking at emulating this kind of a model in their own areas. So first question, what next are you going to throw at this room full of CAs and lawyers in terms of new functionalities and new features? So what are you working on currently?
A few of the things that we are working on. We are working on thinking of currently if you look at the GST portal, it caters to a concurrency of around 3 lakh taxpayers. We are thinking of expanding the capacity. We are working on that. And few of the improvements that we have done on the taxpayer portal is improving the performance or improving the tax performance of the GST portal, that is enhancing the taxpayer's experience. How does we deliver better for the taxpayers? And if you look in the last few months, if you look at filing of GSTR 1, when the government came up with the idea of GSTR 1, 2 and 3, all the code was written, and what we have done is we have done code refactoring, where all the redundant code has been removed from GSTR1, which has become more performant, which have been optimized. And if you look, like, there were functionalities like the submit button and then you file few things. Now the submit, there is no more nothing called the submit button. That also has been removed. And today the GSTR1 is scaling and performing much better than it was 5 years ago. I'm confident that last 2 months I have seen that the taxpayers have been able to file GSTR1 seamlessly. So things are improving. So these are the few initiatives on which we have worked. And overall, if you look at the GST architecture, I can proudly vouch that this is the latest architecture that the world has to offer. And today, Venkatesh sir, the taxpayers are talking about API. What Sandeep sir said, API. This is the latest architecture the world has to offer. And Indian taxpayers are talking about API. They're talking about JSON. And JSON is a compact object or a mechanism of sharing data. And if you go to any part of the world and say JSON, I don't think many of them will understand. Only technologists will be able to understand that. And taxpayers, if you look at it, they know all these. And what I heard the other panelists says, it is completely paperless. So we should feel proud of that, sir.
Really great to know, Nirmalji. Sandeep sir, maybe a question to you. I think you talked about e-invoicing and the need for having a completely paperless system. So currently e-invoicing works in some kind of a partial way, where up to a particular turnover, businesses are required to report their e-invoices. You've also exempted many sectors from the purview of e-invoicing. So when can we expect, a greater coverage of these exempted, categories under the invoicing scheme?
So actually, Venkatesh, the challenge, and I'm answering that to you also, Mr. Agarwal. When you try and build a shoe which fits all, you can imagine the challenge. All of you are from business. So, when it comes to, for example, you said about pre-population, about integration with your ERP systems and everything. We have such a wide spectrum of people who are at one end of the technology to the other. So, based upon certain experiences which happened very early in 2017, there is a very, I would say, a very robust and a very good approach to scaling everything gradually. Nimbleness in administrators, whether it's digital environment or its policy, is very critical in today's environment. So I think it's almost like that without stumbling, you want to keep learning and you want to keep expanding. And the best part is, when we started with e-invoicing, for example, 500 crores and above, I remember being a part of those discussions in the ministry at that point of time, and there was a little apprehension about resistance. And when one brought in something new, appreciated there were a number of people writing, please defer the date. And today it's so exciting actually to see how we were able to scale up by bringing these thresholds down from 500 to 100, 20, and now there's actually a demand to sort of make it mandatory for everybody. So I think that this gradual approach and the gradual expanse of this particular concept or other similar concepts is a very healthy thing. There may be a requirement for little patience on the other end. Plus, one has to be very mindful of accommodating, all types of taxpayers and all types of industries. And there are, challenges that one certainly comes up against, which get reported, and one had not even thought of that. So I think that now we should see, expansion of e-invoicing. there will be for some time to come certain amount of exemption, selectivity, but we are in the right direction. Thanks, Venkatesh.
Thank you so much, sir. So Ajay, maybe back to you. I do know that one of the very, very strong things that Sandeep Kumar sir has done is become Big Brother, and Big Brother is watching. So he gets data from income tax and many other sources, and is able to put together a comprehensive profile of the SSC. Now, from your perspective, things change, right? Because you need to ensure that you're not doing a silo-wise reporting. What do you think would be the ideal tax organization structure, going forward to ensure that, even by mistake, you don't do a wrong reporting?
Well, the technology has been developed by human beings. So there ought to be some bit of, here and there, even if, technology has been developed. Obviously, you need to put required skilled professionals just to make sure that they are doing their job properly. Over and above, you would still find some errors may pop up. I think, again, in the last council meet, they have understood the industry problems. So probably they are going to, allow amendments to the returns which, taxpayers have been filing. To my mind, that issue should get resolved. Now, in addition to the data part, which most of us are filing in our tax return, clearly we have only one side of the view, which is providing the data in GSTN, and therefore the department are able to get that rich data from all of us. At the same time, the department has a view not only of Vedanta, but it has a view of our vendors. It has a mixed view of theirs as well, that how these two parties are interacting, collaborating and working together. So my request to the administration is, it is very, very important for all of us to do our compliance, but at the same time, with data richness going up each and every day, should we not look at data integrity, data mining, and making far more better decision with respect to GST investigations as well, rather than thinking sometimes, not always, but sometimes, that where are the loopholes in the data? How are we going to go and start the investigation against, taxpayer A or taxpayer B? Large conglomerate, I have not heard too many issues with respect to, filing their data, filing their return, doing their compliances. But time and again, we have come across saying that, okay, sorry, you will not be able to get this particular ITC. Reason? Oh, the vendor has not filed the tax return. Second, no, initially it was 20%, then gradually we moved to 10, then we moved to 5, now we completely moved to 2B. Now, it's very, very difficult to manage so much of changes and then say that, okay, there are challenges in terms of our data contribution to the GSTN. So my request is that, I understand administration also have its problems because it's a growing baby. You will keep, mending ways how baby is growing. How are we going to really make sure that it gets the principles enshrined in the family so that, the baby grows properly. But look at from other side as well. Too many frequent changes doesn't really help anyone. Do we need so many, councils meet? Probably yes. From administration side, probably yes. But when I sit in my chair and I see, आज पता नहीं क्या निकलने वाला है, पता नहीं किसको किसको मेरे को पकड़ना पड़ेगा to make the changes. I do not know when will it get. So it's tough. Please understand it tough. And the moment implementation of any policy gets tough, the quality of data will hamper. And therefore the question of, did we do the right thing will keep rising. So it is not that, taxpayers do not want to do their job properly, but, we are deficient primarily on account of, regulations.
Thank you so much again, Ajay. I think we'll give the last word to a lady. So, Nisha, you have the leaders from government, who handle technology sitting with us. What will be your ask as an industry user in what kind of technologies and functionalities would you like to see, coming up?
First, as I said, that think of it, we are just coming out of COVID. I think this must be the first few conferences which are face-to-face. So think of it, we sat at home, ran our offices, ran our factories, 2020, 2021. I think Lord goes to the credit of GST. If it was the era of C firm, F firms, do you really think we could have managed our supply chain or excise? Today, as tax professionals, we can have our people sit together. Not sitting in a factory or a warehouse is because of technology, right? So I must compliment government for that. I had transfer pricing globally for Honeywell, so I know how multiple other countries work, because transfer pricing is all about intercompany transactions. So India's GST in its present avatar is far ahead than many other in the Mexicos or the Brazils and things. But one of the biggest impediments India has, we have frequent changes. So what we should, as a taxpayer, my request is, we should have less frequency of changes or processes, so, and let it stabilize, because the taxpayer takes its own time to institutionalize those changes, right? Today, it's apart from just as a tax professional, GST touches a procure function to a sales function. It impacts every factory person to a sales guy. No more, I can say a GM of a business doesn't know GST. He has to know, because GST is the only law which is from procurement to sales a pass-through tax, right? If you do it rightfully, if you plan it rightfully, you can mitigate the incidents. What the government also say is the double tax, which you used to see because of multiple taxes in the old regime, right? We need stability. We need one federal law and not too many state changes or state view. I know we understand Government of India's predicament of multiple states and center, but if center thinks a position of law, then all states should have the same position, because then that's important for a taxpayer to well plan it. Well plan from a procurement to a, to a sale function, then you can seamlessly plan and also give visibility to the data. In fact, I had the transfer pricing function. In India, I would always use GST data to be my better friend than anybody else, because GST data, as it records, it goes into from my system. Every procurement or every sale is recorded through a system, so it gives actually a good quality data. And I live an 80-20 life. I absolutely live an 80-20 life, where I say that my 80% of the data is good, then I just have to work on 20% issues to iron it out. That is how we have to do it. So we need to stabilize the law at its, at the ERP system or the system level. So too frequent changes can cause disruption. And that also gets into shortcuts, which are, which we don't want to do it, but because there is a timeline to file a monthly return or a quarterly return or a daily stuff, that's how errors do happen. But they are far and few, sir. As compared to 5 years back, there are far and few. I would say, as I said, I have 2 decades career, 5 years, and today I can say, I don't think any one of us would deny that we couldn't have tide over COVID unless it was an old regime. Today we could actually sit in our offices and still be compliant is because of GST.
That's a notable quote.
I would definitely give credit to sir. We all have seen it.
Thank you so much, Nisha. So maybe we'll just have a quick round of questions. I'm aware that the last panel did not have time for that. So 2 questions for you. One is the fact that the GST updates on the CBIC websites are not being done, in time, and probably there's a lot of stale information out there. Would you like to comment on that?
Yeah, so So, on the website, yes, my fault, some of the old stuff doesn't go, but there are an equal number of people who are saying that I want that old stuff there. So, in fact, yesterday we collectively did a review of our website, and we have a new design and something new is coming up. We also started a new tax information portal. I don't know if Venkatesh had a look at it. So this is the first time we are actually trying to give, fully updated with superscripts and circulars, notifications, as you see in private textbooks. Idea is there shouldn't be need for private textbooks. So we are getting there. We started with the act, then we went on to the notifications, and then don't forget that we have to go back 20, 30 years. And then we of course have our regulations and the circulars. So we are getting there. We have that concept, and we've taken a pledge to deliver. So the portal will progressively, I would say every Monday you can have a look at it and there'll be some value addition. Our website also we are redoing. We had a discussion yesterday. Somebody internally raised the issue that why do we have a tab for service tax? You will be surprised that there are so many internal requirements and demands, because there's still stuff going on service tax at the moment, those old legacy matters. So my promise to deliver a better product, and that process is very much on. We're very conscious of it.
Thank you so much, sir. There's also a question on the fact the IT Act 2000 does not accept electronic signatures. Well, that's not quite correct. Right from day one, it's actually, been written in such a way that it does accept electronic signatures. Basically, an electronic signature is nothing but an encryption using a private key of the message digest, right? And that's been there right from day one. I'm happy to take it offline with the person who's asked this question. The floor is now open. Maybe we have a time for 2 or 3 questions before the next panel.
Venkatesh, I actually have one question. So this is a question for you, sir. I think you have really, identified the issue quite well on the pre-GST litigations which are going on. So is there any, thought within the ministry coming out with some kind of policy scheme, MNST scheme, just to, can we erase the past and let's start focusing on the future? As we all know that, GST and customs are here to stay. And thank you.
Thanks, Mr. Agarwal, for that question. The SVL DRS scheme ran for central excise and service tax for quite some time. So I think that bit is over. We've never done anything remotely like that on the customs side. But we did it for central excise and service tax, and it was hugely successful. So is there something else that we could...
Because the cooperative federalism is working so fine. So I was largely focusing on the state level issues, for instance, VAT, sales tax, entry tax, and there are so many municipal level taxes also, sir.
So there, I'm sorry, I'll have to, turn around and express a limitation in being able to answer that question. But yes, I mean, we are sort of leading by example, having put out that scheme. And I'm sure that the fact that, taxpayers such as yourself will bring up this requirement in different fora, it will catch somebody's imagination. And if there are those kind of outstanding issues in states, I'm sure some of the progressive states will take that step, and this whole thing will gather momentum. But definitely, there is a need to clean up issues which were there in the legacy administration and would make life for taxpayers much easier. Definitely.
So one thing that I want to address, which Madam Gupta and also Mr. Agarwal said, that frequent changes and they're having issues doing the changes in their system. From GST, and what we do is we try and release the APIs as soon as the change is given to us, and also we talk to various service providers, the GSPs, and help them in integrating those APIs so that these changes can be incorporated in their system also. So this is what we are doing from GST on site, sir.
Sir, I have a question. When we go to the field, the officers many times say that, okay, you are right, you have nothing done wrong, but I am not able to help because of the platform do not allow me to do it. And the second thing is that there are certain provisions where human mind is needed, where the human mind has to take an action, whether it is right or it is wrong. On the GSTN portal, it is arithmetic. You have some logic and the decision is according to, like section 130, which speaks of the penalty. Officers are not able to use section 130. All the orders you can see throughout the country are being made in section 129 subsection 6. So how you are going to address those issues? Thank you.
First of all, one very big tectonic change, I was talking about life before GST and after. True file and forget. Many times this phrase has been used, file and forget, has come after GST. Please remember the assessment concept in central excise and service tax, right? And today, when you're filing your return, you never have to go back or wait for an order to come to you. You've done it, you can actually forget about it. It's a great step forward. There are better steps that will come, developments I'm sure will take place in the next year or two. Also, this has been possible because of maximum automation that we could do of the decision-making process. And I think that there is an element of learning as you go along. We've realized some issues which come to us, which taxpayers such as yourself might raise. You try and put them in a box, that how can you tackle this kind of thing? These issues come up before various fora. Look at the seriousness of the government in terms of setting up a group of ministers to look at IT issues. So, the government and the finance minister is so focused on giving world-class technology services that you actually have a group of ministers looking at those IT issues. And Mr. Manish Sinha has interacted very closely, so has people from the ministry. Many decisions have been taken in the report of the group of ministers. And we are looking at being able to put issues such as the one you've raised in a box in terms of being able to use machine learning or, artificial intelligence to be able to identify also and tackle also. But some amount of automated decision making happens. For example, you have a situation, relating to, let's say, a verification of a registration. I can't automate that. So you're very right that there the application of mind comes, and just as we have an entire spectrum of taxpayers, some most well educated, others who don't know their job so well, sometimes this problem might arise even on the administration side. So keeping everybody abreast with the rules, with the regulations, that's very important. And we, for example, from CBIC side, we've done programs which have involved training of almost 50,000 officers across the center and state. And we have to continuously probably use technology like OTT platforms and stuff like that to put out videos, which we are trying. So we're working on this concept where we can actually turn around and make, every time we issue a circular or we do a small little change somewhere, we want to put out this, on an OTT platform, that instead of trying and figuring out, so whichever division has done this, they should also give a small little explanatory thing which can be seen on a video, which will help people understand a little better. So you'll see all these improvements, but I appreciate your concern. 95% things can always be solved by machine, but 5 will always remain.
So practical aspect of explaining
it's
the
not
things.
that. See, today, at least I can speak for CBICB. We ran this entire campaign of building taxpayer facilitation centers. It's a walk-in place. One of our chief commissioners, in fact, has a beautiful idea where he's trying to actually build it into a taxpayer's cafe. He said you can actually come, this is I'm talking about Bombay, you can actually come, you order your coffee, your sandwich, whatever problem you have, somebody will come and sit with you across the table and solve it.
Sir,
Wonderful.
this is only a concept available to CBIC. Actually, officers do not know commissionerate have that. I have been visiting various commissionerates. Sorry, sir.
I think we have absolute amount of time, so all 4 of us are available, all 5 of us are available for any further questions offline. We thank Sandeep Kumar and Nirmal sir for being here, gracing this occasion, and giving us the government insights into the adoption of technology. Nisha ma'am and Ajay sir for giving the industry perspective, and thank you all for making this such an enriching session. Thank you very much.
Please remain seated. The next session will begin shortly. Let's move to the next session on rate rationalization. I now invite to the dais Mr. Bipin Sapra, partner EY India, Mr. Sanjay Mangal, Principal Commissioner, GST Policy Wing, Central Board of Indirect Taxes and Customs, Ministry of Finance, Mr. Rajesh Gosen, Head of Tax, Ericsson, Mr. M.H. Qureshi, Tax Head, Genpact, and Mr. Rahul Verma, Tax Head, Cipla. I now request Mr. Bipin Sapra to take the session forward. Thank you.
Good afternoon, everyone. First of all, let me welcome Mr. Sanjay Mangal on the dais and for kindly consenting to speak on this very interesting topic which we have today. Also a warm welcome to my fellow panelists, Mr. Rahul Verma, Mr. M.H. Qureshi, and Rajesh Gosai. So sorry. So that I'll just set the context, and I don't know whether we had question answers in the earlier sessions, but I would want a little more interaction if we can have in this session, so that there is a healthy debate. A lot of questions are there which are unanswered. Sanjay, as you know, is the Principal Commissioner GST in CBIC, and he's also the convener of the Law Committee. So apart from being very closely associated with the creating of the GST policy along with the GST Council, he's also had he's also been involved in the issues pertaining to the law points, and I know given the GST Council meeting which has happened today, we would want to seek his insights, some things which haven't been able to, which we haven't been able to see forth in our the press releases which have come till today. But getting back to the basic issue of rate rationalization, I think since 2017 and even before that, before GST came in, the rates were the point which was under constant debate and has been in constant debate and will continue to be so, given the very nature of its, the very nature by which these rates are being implemented on goods and services. The concept we started off was with the tax neutral rate, a revenue neutral rate, which was being debated in 2016-17. And when in 2017 the final rate structure came, which had a nil rate, a 5%, a 12%, a 18% and a 28%, there was a huge debate. And prior to that also there were a lot of debate. We had some white papers from the 15th Finance Commission. We had some other reports which came in, which talked about various rates, like the 15.5 was the rate which was talked about as a revenue neutral rate. Then there were discussions that if everything was being taxed, we would have a rate at close to around 12% in an ideal scenario. We are far from an ideal scenario, and various countries have chosen various methods to reach a GST rate. However, the amount of variety or the varied nature of GST rates which we have, I think is the most in our country, and some of it is because the way we have grandfathered our earlier taxation system and the rates which were prevalent at that point of time. So our first set of discussion today, and I would very soon get Sanjay into the discussion, would be that how this GST structure has evolved over the period of time. What are the thoughts which the GST Council has, and what are the debates which we are, what debates we see in the media, how much of that is correct, and how much, what will be the way forward which will come in. That's the first point of agenda which I'll set. The other points which I want to discuss is, we have seen exemptions being withdrawn. We have seen inverted duty structures being corrected by rate rationalizations, by bringing in refund mechanisms, by changing the refund mechanisms in this GST Council. So we want to start that discussion, and obviously the perennial question of broadening the tax base always remains. When will we get to see petroleum, alcohol, electricity, real estate, which are outside the purview of GST today, into the system, so that we actually don't have to pay tax, a higher rate of tax on other goods which are today already taxed at 18 or 28%. With that, I turn to Sanjay. Sanjay, your thoughts on how this GST rate structure has panned out till now, and what are the discussions going forward, and are we going to look at a rate increase at some point of time?
Thanks, Vipin. Good morning, everybody. Good afternoon, everybody. And thanks CII to give me this opportunity to be here and interact with you all. Vipin has sent a context about the evolution of rate structure in the GST in the country. And as we all know, that when GST came, it transformed all the indirect taxes in the country which were prevalent at that time. There were diversified duty structure in different states. In center also, there was central excise duty, there was service tax, there were additional duties. And in states we had VAT, anti-tax, purchase tax. So multiple duties were there, multiple rate structures were there. Every state has had got different rates. So when GST came, it was envisaged we will have a uniform rate throughout the country. And it was thought that on the pattern of like a number of countries in the world, we will have a single rate, which will make GST very easy. When it was implemented after a lot of discussion, the basic intention was that there is a desire, there is a requirement of having some continuity with the pre-GST rate structure. It should not be too diverse from that. There should not be too much impact on the common consumers, and there should not be much impact on inflation. And basic and revenue garnering was one of the agendas, and revenue garnering should be there for both for states and center. So considering that, and considering that in our country we have got so much diversity there, which is unlike a lot of other countries. There are different stratas of society, there are different regions and geographical region, and which have different requirements. So considering that, GST Council came up with different slabs. There were luxury goods, sin goods, for which 28% was devised. Then there were other slabs which were devised considering a 5% slab was devised considering the requirement of common person, because it was thought that the goods of mass consumption, they should not be taxed too much. So considering that some goods were exempted, some were taxed at 5%, and the remaining goods were adjusted between 12% and 18%. The thought was that with a period of time we will come to a convergence, we will come to a stage when we have less rates and we have almost uniform structure. GST Council over a period of time has then discussed various feedbacks received from the stakeholders. They have taken into account the wishes of legislatures, wishes of people, feedback from industry. And in the initial period, a lot of changes in rates were made. So a lot of frequent changes were also made in the rates in the initial period. A number of items which were in 28% slab, they were used to be more than 200 items in 28% slab. They were removed from 28% and brought down to 18% or other slabs. And now we have only 37 items there. There were some adjustments between 15% or 12%, 18% with demand, some special rates like 3% or special rate for gold, they were also devised. But over a period of time, now these changes are not that frequent. Now a sort of stability has been brought out, and the thinking is that we should tinker with the rates only to improve the structure, only to remove the distortions which are there, only to remove the disputes and ambiguities which are there in the system. And so main approach which is there is in this direction only. And as you would have seen like in past 2 or 3 meetings of council, the decisions which are coming out are in this direction only. Remove inversion wherever it is desirable, withdraw unnecessary exemptions and bring out a structural rationalization in the rate so as to remove those ambiguities and disputes which are there, similar items being in different rate slabs, giving rise to different interpretation, advanced ruling authorities giving different interpretations about the classification of items and about leviability of different rate on those. So now the approach is how to remove these disputes, how to bring more stability and assurance to the users or to the taxpayers as well as to the consumers that this item will fall under this this particular rate, and to withdraw those exemptions which are not serving the purpose with which they were given initially. In the last meeting, in 45th meeting, a GOM was also set up by Council on rate rationalization with a mandate to look into all the inversions, all the exemptions and all the rate rationalization issue. The GOM has given its recommendation, first like its interim recommendations, which were discussed by GST Council in the recent meeting, and almost all the suggestions of GOM were accepted. And a lot of them involve removal of inversions, withdrawal of exemptions, and also adjustment of some items upward or downwards as per the requirement. Besides, the effort has been or approach has been to come out with various clarifications also, because a number of disputes arise from time to time because of lack of clarity where the item should fall, what should be the rate on this item. So over a period of time, the Council has coming out with a lot of clarifications to bring clarity, to avoid any disputes and to settle any disputes which are going on, so that unnecessary harassment is avoided. Now in this Council meeting, this GOM on rate rationalization, that has been given an extension of 3 months, and it has been given time for another 3 months to submit its report. We expect that GOM will continue in its approach to bring more items on which inversion can be removed, more items on which rates can be rationalized, and also whether some other exemptions also can be withdrawn over a period of time. So the intention is not only to garner revenue. Revenue is one of the things, but it is not that revenue is the only intention. Revenue is one of the byproduct, I can say. But how to bring stability in the system, how to remove distortions, and how to provide more clarity so as to avoid disputes. So in a nutshell, I will respond to Vipin by saying this is the approach government and the Council is taking on this issue of rate rationalization, withdrawal of exemptions, and correction of inversions. Thank you.
Thank you, Sanjay, and it's really heartening to see that, heartening to hear that rate rationalization is being driven by removal of distortions, and obviously the GST Council has inflation on its mind as we speak. The common fear among everybody in the industry is that given that the compensation for the states has gone, there is a lot of pressure on the states and the GST Council to raise the rates from a perspective of corresponding to whatever the shortfall has been. So that's one part of the scenario. Do you really think GST Council will be able to immune themselves from the pressures of compensation?
As I had mentioned, that while GST Council is looking at rate rationalization and removal of inversion from the perspective of removing distortions and bringing out more clarity, the revenue will be only a byproduct. It is not that we are not looking forward for an increase in revenue. Revenue is desired by the government, whether it may be central government or state government, because this revenue can only be used for welfare measures, for defense and other purposes. And both states and center require revenue. But this is not the only intention. While the structures are being reviewed, while inversions are being, correction of inversions are being looked into, and while adjustment of items in different rate slabs or revision of rate slabs is being looked into.
Thanks, Sanjay. I think very well said. Moving on to my fellow panelists out here, and Mr. Rahul Verma is the head of tax CIPLA. He represents the goods industry out here on this panel. Rahul, what's your views on the rate rationalization, and what is your industry specifically and the general goods industry looking at rate rationalization?
Yeah, thanks Bipin, and thanks EI for this opportunity. And I would like to compliment government first, the kind of they are with the people of India in terms of taking care of the rate during COVID, when things which are required for treatment of people like essential medicine, the rates were reduced for some time, and that was a big relief for entire India. And recently in this recent GST Council made a recommendation to put the credit for services for inverted date related refunds. So that will also kind of ease out a lot for the industry to kind of get rid of inverted duty impact, especially in pharma and many other industry where the output is at a lower rate and inputs are a much higher rate. In pharma we have a average rate of 12% on our output, and while the input is at 18%, and services are equally taxed at 18%, which always lead to inverted duty structure. So having said that, the recommendation of all the pharma associations in India to the government has always been to look at rate revision or bring down the rate of 12%, where the 96% of the goods are covered in pharma, to a lower rate of 5%. And with this clarification on inverted duty structure, things would be even taken care better, because all the inverted inputs could be taken care by way of inverted duty refunds. So these are few things that come our way in terms of inverted duty structure. And yeah, definitely I think had there been in the last GST Council, had they also looked at seamlessly giving inverted duty refund on the capital goods, that would have been a great boon for the industry. But I understand, I think the government has its own time to catch up on rationalizing the things, and it will come in the time to come. Thanks, Bipin.
Thank you, Rahul. Mr. Qureshi, you've been part of the service industry for a long time. Your views and your expectations from rate rationalization, and how, if at all there is ever an increase from an 18% on services, what would be the impact on your industry?
So Bipin, thanks for that question. And so from a service industry perspective, I think earlier in the pre-GST regime, the rate actually used to be some 15 or 15.5%. That was the last service tax rate. And then it moved to 18%. So I think we are pretty much on the higher side actually. In fact, so for example, my company is mostly engaged in exports. We are not directly impacted by a rate. We are of course impacted because of our input taxes. But there are a lot of services which actually serve the domestic market. For example, telecom and many other such services where actually increasing the rate will have a direct impact on the economy and on the inflation. So I don't think, so I understand that with the compensation going away and everything, there might be a case for rationalizing or increasing some of the rates. But with due respect, I would submit that the rates on the service industry, I think they are already very much on the higher side. Maybe there is really a case to bring down some of those rates. Maybe there is a case to actually maybe merge the 12% and the 18% rates into a 15%, which obviously will impact some of the 12% items, but which might benefit some of the 18% items, especially on the services side. So that would be my view. I think on the services, we are already very much on the higher side. And there's another aspect which I'll come to later, which is really on while we are exporting services, our inputs get blocked because of various issues that we face on the refunds. I think that we can come to later, but my limited point here was on the services. I think the 18% is very much, actually needs a downward rationalization, I would think.
Thank you, Mr. Qureshi. I think we all are looking to the rates getting converged. We have a 5-rate structure. At some point of time, keeping nil rate aside, the remaining 4 rates, the 5, 12, 18 and 28, should get converged into 2 rates, something which we always talked about. What should be in what, I think only time will tell. It's not an easy decision and not a simple math. There's a lot more discussion behind that. Rajesh, as head of tax Ericsson, you are into both goods and services, and you also have a visibility of taxes around the world. So what's your take on rate rationalization, and what's your ask in terms of where the rate should go?
Thank you, Vipin. What I think about it, it's not a straightforward question to answer. If you see the GST, it was being talked about right since 2010, but ultimately got implemented somewhere in 2017. So the whole country took 7 years to implement GST. And when we talk about rate rationalization, we should bear in mind that yes, a part of this country was having the VAT legislations, and that was having for many, many years. And before that, it was general sales tax across the states. So now, if we think the rate rationalization can happen anytime soon, probably I think it should not be a good idea to have. I'm not saying it will never happen. It will happen for sure one day, because one of the canons of the taxation should be there has to be simplicity in the taxes. So it should not be thought from the government perspective only, but it should also be thought from the industry perspective who are implementing the law. So sometimes you have to get the certainty around the taxes and the rates, etc., etc. But coming to the fact whether we should be merging, or it is high time for the country to merge 12 and 18%, I should say yes, it's high time, but is it really doable? The simple answer may lie in the fact that if we go through the report of the 15th Finance Commission, it says very clearly that the effective rate of tax which is happening, and data was available till mid of 2019, I believe, the effective rate of tax remains somewhere, it is below 12%. And if we merge 18% to 15%, because most of the services we know, and of course the goods also, fall under 18% tax bracket. So by merging 12 into 15 and 18 into 15, means bringing 3% up and down both ways. Of course, it would have some sort of dent in the collections of the government. Of course, government would best know about it. But I would like to add one thing here. It's not about rate fixation. My experience as a professional tells me, if the implementation of that legislation is very robust in this country, probably if we maintain the rate at 15%, it can garner the same revenue probably it could have garnered by maintaining 18%. So implementation holds the key. I do remember my day when the whole country was talking about GST implementation. I said the law may be very simple looking. Of course, it's not that simple looking when we look back. But the implementation holds the key to the success of GST. So my take on this would be yes, high time for the country to witness a mid rate between 12 and 18, which can be 15, 15 and a half, 16. The government can decide on that. But on the other side, as I said, the implementation in a very good way at the field formation levels probably holds the key to the success of lower rate and higher collections. If we look globally, we cannot compare India with the other parts of the world because, we know there are paradigm differences between the demography, economy and everything. But having said so, every country, barring a few, who have already introduced VAT, from day one, they're very clear, either it's going to be 5%, 15% or 20%. Of course, Saudi is one, which inflated 5 to 15 in no time. But now they are considering, that step was not good because 5 to 15, when they were not even very well aware about what the VAT legislation is. But now they're thinking, I learned that from bringing it down from 15 to some 10% VAT percentage. So yes, high time, but yes, implementation also in a good way at the field levels probably holds the key to the success of GST.
Thank you, Rajesh. I think we all believe in that thought that policy is as good as it gets implemented. If the thought doesn't percolate down to the field levels, the whole policy it goes waste. I think, and that's the endeavor which everybody is trying to do, and whatever recommendations we also make through CII and other bodies is that whatever policies are being framed, the intent reaches the grassroots level so that the industry benefits from that. Sanjay, picking up on that structure bit again, I think rates will continue to be a debate. One answer which people talk about is that if we can get more products, if we can broaden the tax base, the talk of petroleum, the talk of alcohol, the talk of real estate, and others coming into the purview. You have been purview to the GST discussions. What do you see? Do you see a realistic thought that given the amount of revenue which is there, which the states and the center gets from petroleum, would we ever see petroleum coming into the GST folds? And if so, when? And the other things also I spoke about. So, will we actually broaden the tax base ever?
Thanks, Vipin. You have raised a question which is raised in almost all the forums. So, as to the question whether petroleum and whether electricity, they are going to come under GST or not, or real estate, etc. Now, as we know, we are evolving over a period of time. 5 years have gone, and 5 years have seen much changes in GST. We are right now in the process of rationalizing the rate structure, removing inversions. We are also looking for some further improvement in revenue. But there are some changes which will come over a period of time. There has to be a right atmosphere for that when these changes will be implemented. And bringing petroleum, bringing other items related to petroleums in GST, it will require a broad consensus being emerging in GST Council. And as we know that both center and states, they get a lot of revenue through these products, and there is a point of view of states that they are getting a sort of independence which is there. They have got some flexibility in taxing petrol and diesel within their states, which they will have to surrender if it comes into the net of GST. So as we are moving ahead, a lot of decisions, tough decisions are now coming up, and council is taking these decisions. I think it will take some time, and the decisions about whether petroleum, whether electricity, whether real estate should come into purview of GST, they will also be taken in a course of time when the right atmosphere is there. Thank you.
Thanks, Sanjay. It's a difficult question, I know, but I hope we someday get an answer to that. Rahul, the pharma industry has been impacted by inverted duty structures, and while we saw some change in the formula this time, what would be your ask from the GST Council in terms of the inverted duty structure and any other issue which you think you would want to flag?
Thanks, Vipin. So, the previous recommendation that the Pharma Association has sent to the CBIC and the GST Council was, bringing the rate down to 5% and also bring the rate on the APIs and the production-related services down to 12%. So, having said that, now with this new amendment, the new formula which has been recommended to, bring services at par with inputs, that will ease out a lot in terms of the impact of inverted duty structure, so that we could all now file our refunds with that. As I previously said, the ask would always be to kind of now when the law doesn't distinguish the credit between inputs, capital inputs and services, then we should not be carrying that legacy of the excise time law, which distinguish between the three, and we should allow seamless credit and seamless inverted duty credits when it comes to inverted duty impact on pharma, on many other industries which are facing this issue in FMCG. That is one ask. I believe the government will be looking at it in their recommendation in the time to come. And besides that, in typical FMCG and pharma world, we always have implication around expiries and all, which is part of the life. So there we find out like there are a lot of issues around asking duty on both output as well as on the input. There has been some issues around that which is happening in the field area, which is not as a matter of policy, but having said that, those policy clarification and rationalization direction would ease out the pressure at the people at the ground which are implementing this policy, as well as give a breather to the industries, so to say, and at the same time ease out the input cost of the taxes which are built in the product, and bring the prices down for the product for the customer at large, and the for medicine consumer at large, the patients at large. Thanks, Vipin.
Thank you, Mr. Rahul, for this input about first inverted duty refund, and second about some issues which are there in pharma sector regarding rate structure. As regards you ask for inverted duty refund. Now in this council meeting, we have moved one step ahead. Initially, the input services ITC was not being considered at all while we were considering payment of output tax liability of inverted supplies in the formula. This time we have moved ahead. We have included the tax paid through input services ITC also into the formula, and it will provide considerable relief to the industry. It will result in some revenue outgo on part of government, and council graciously has even considering that there will be a revenue impact, has accepted a change in formula. So we are moving a step ahead. As regards the second ask, why we should not provide a refund for capital goods also. Now this issue of capital goods was considered by GST Council in an earlier meeting in detail, and the view taken was that first, in the present mechanism of taking ITC of capital goods, the capital goods ITC is given in one go. Although the utilization of capital goods will be over a period of say 5 years or 10 years, and there is the refund is for a tax period. In terms of input and input services, there is a one-to-one correlation. Maybe there is a one-to-one correlation between the input supply and output supply within the same tax period. But in case of capital goods, that correlation is not there. And there are chances of huge misuse of this facility by unscrupulous elements, because there are, as we know, there are some people who come into the system just for misusing these schemes, and if ITC refund of capital goods is also allowed, then these people will come into the system for some period, take a refund of ITC on capital goods and vanish. And this will affect all the taxpayers, including honest taxpayers, because this will make them uncompetitive. So council felt that this is not the right time for going into this sort of refund on capital goods. Maybe at a later stage, council discusses and finds a way out, but at this stage it was thought that a capital goods refund will not be given. Now about your other ask of rate adjustments in pharma sector, basically you are talking about your inputs. Now about inputs, it is always a very tough decision to reduce rates, because again, while they are inputs for your sector, they might also be inputs to some other sectors, and they are themselves they are a supply, because somebody will be manufacturing them also. So reducing rates on them will again cause inversion. So the solution is not lying in it. Solution maybe ultimately is to remove inversion down the supply chain. Pharma being a sensitive matter, it will take some time, but definitely your ask will be kept into consideration. Thank you.
Thanks, Sanjay. I think it's very well put. Mr. Qureshi, you spoke about issues which are plaguing refunds in the export sector, especially export of services. And intermediaries, one issue which I have seen impacting and its interpretation impacting the grant of refunds. I think we had a wonderful circular which came out from CBIC and the GST Council some time back. I would want to understand what has been the impact. Does intermediary still a real problem out there, and what according to you can be a solution?
So the circular did come out in September 2021, and we would like to thank Mr. Mangal for actually helping us with that wonderful circular. It is a very comprehensive circular. It has some very great examples. But unfortunately, on the ground, the circular is not being followed. In fact, what is now happening is that earlier the rejections which the BPO industry was seeing were few and far between. They were localized in a few cities and whatever. Now they have actually become more rampant. In fact, this circular actually talks of subcontracting as an example of what cannot be an intermediary. But in more and more cases, we are actually seeing that subcontract agreements are being picked up and are being held to be intermediaries. So in fact, I think as many of us know the way the Indian IT and BPO industry works, the client contracts are mostly signed by overseas entities, because in most cases the clients really want to contract with a country, with a company which is in their jurisdiction. They understand those laws better. And therefore, in all of those cases, India ends up being a subcontractor. And as a subcontractor, India is actually earning billions of dollars of revenue and foreign exchange. And it's a thriving industry. And as Mr. Mangal also said, the government and the GST Council definitely do not want to prolong disputes and want to resolve disputes. Now, this is not a dispute which is actually helping anyone. It is not helping industry. It is not helping the government. It cannot be the government's case that these exports should be taxed at 18%. It will make the entire industry uncompetitive, unviable. That is not the government's case, definitely, at a senior level, at a policy level. So I think somewhere, some further steps maybe. I don't think the circular needs any kind of tinkering. The circular is very good. But somewhere maybe some kind of implementation guidelines may kindly be issued. Some kind of outreach may happen to some of the commissionerates, explaining the facts and the context in which the circular was issued. Maybe maybe some committee of senior commissioners could be set up and actually look at some of the disputes which are happening. I mean, not on an actual case-to-case basis, but at least broad parameters could be tried to be laid down, looking at all those disputes. And sir, ultimately, I think the solution really is to actually amend the law and basically change the definition of intermediary, because I don't think a shared service industry can really be held to be an intermediary in most circumstances. So I think the law really needs to be relooked at. I think the circulars are a very good fix, but I think they will remain a short-term fix only. People will find ways around them. Maybe the law needs to be amended and some kind of permanent closure needs to be brought to this issue.
Thank you, Mr. Qureshi. This issue of intermediary, Mr. Qureshi must be knowing because he represented industry for bringing the facts to our notice, and we took up this issue. Now, as we knew at that time earlier on this issue, there were divergent view in the council and we could not come to an understanding. So after a lot of discussions with the industry, after a lot of internal discussions, we came up with a circular which we thought clarified a lot of things. And we used some clear-cut examples in that circular so that it brings clarity both to the industry as well as to the officers. We thought that this will reduce the litigation quite a lot. But as Mr. Qureshi is telling that there are some field formations who are still going for a different interpretation. I don't know the facts of the case. I cannot comment whether they are doing it right or wrong. But if the basic principles which are given in circular, our circular, what we proposed in the circular was the basic guiding principles. In actual field position, the cases will have different facts. Each case will have different contract. Each case will involve different circumstances, different facts. So which has to be interpreted by the local authorities, by the taxpayers themselves. I cannot comment on that, but yeah, definitely, I agree to suggestions of Mr. Qureshi that there's a need for more outreach to the officers, more need for explaining the principles behind the circular and how we have arrived at those principles. This needs to be explained to officers. We have taken this ask of Mr. Qureshi. We have noted it, and at CBIC level, we will try to have more outreach with our CBIC zones to make it to explain this to our field formations more clearly. I can just assure you, the circular, as he has mentioned, does not need any amendment. I also feel that it does not need any amendment. Bringing more changes in circular will only complicate the things. As regards law amendment, definitely it's a ask in long run, and at that time we also considered whether we should amend the law. But we did not go for law amendment at that time because any law amendment would have been prospective in nature and it would have not resolved the past issues. And our intention was to resolve the past issues also, to bring clarity about the past disputes also. So we went with the circular route so that even the past cases which are already there can be clarified. But definitely in the long run we will look at the requirement of amendment in law so that if in long run if any disputes are there, they can be addressed. Thank you, Mr. Qureshi, for the suggestion.
Thanks, Sanjay. See, I think it's time that the agency services provided by people out here should be considered as export. From 2004 to 2012, the business auxiliary services, or maybe 2011, the business auxiliary services which were being provided were considered as export as long as the recipient was outside India. Most of the countries still treat agency services as export as long as the recipient is outside India. So I think by that logic, the time has come to move from away from an intermediary services, remove the definition at all from the law, and remove that as a consideration for place of supply. That would be my thought and my recommendation, and I think that's what Qureshi ji was trying to say in terms of amendment in law. Very quickly moving on to Rajesh, where I think you face working capital issues, working capital blockage from a non-availability of credit on certain goods and services. Your thoughts and what better can be done and what all things which really irk you from your company perspective?
So, I think we should thank the government for drafting the law quite beautifully as far as input tax provisions are concerned. And if we go through 17.5, I think barring a few services, rest all services are eligible for credit. But, sometimes it happens that for a particular industry, a particular service may be so big, which probably, I would like to bring it to the attention of Mr. Mangal here. I'm not sure what has been the logic behind rent-a-cab services to disallow the credit. Sir, in our kind of industry, you will not believe even the expenditure on rent-a-cab is much more than the turnover of a particular small company. So if we lose 5 or 12% of it, it becomes a cost to it. Of course, we can take a 25% corporate tax shelter on that, but rest 75 becomes a cost for us. And how we go about it? We have to pass it on to our purchaser. And of course, we know that most of the cases, the telecom services is for the end consumption. And end consumption now is country is talking about 5G more and more, and we are less $2 per month in terms of the RP for the operators. So if we increase the input side, the cost side, probably the margins of the operators will not be that big, and they are in any case already suffering from the accumulation issue. So my humble request here would be, of course there would be some logic behind it, why this was not maintained under the eligible category under 17.5, why it was put under 75. But we think, it makes a bit of sense to reconsider this issue, and at least for certain industry, for which, I give you one classical example, sir. The towers may be 100 miles away from the main city. And if there is some fault in the tower, we get a request for the rectification of the error. How we go about it? The engineer will have to go to the site, get it corrected. How we reach there? Because we need a cab service. If on the flight we can get the credit, on other transportation we can get the credit, why not this rent a cab? So this seems to be a bit maybe some distinction which government wants to maintain here, but logic seems to be at least to us a bit missing here. So we would like the attention of the government and the administration on this issue, so that the cost structure can be brought down and the agenda of the government to go digitalized in a full way can be achieved with lesser consumption in terms of the cost to the ultimate users.
Thank you, Rajesh ji, for your suggestion. This 17.5 is basically a legacy legislation, I will say. It is a continuation from what was there in the existing laws. And as you yourself have mentioned, that overall the amount of ITC involved in these items, goods or services, which are there in 17.5, is very, very less. We have also looked into data, it is very less. But for individuals, definitely it may be a substantial amount, it may make a lot of difference to individual companies. I can just tell you one thing, that in a phased manner, we will have a relook at this 17.5 blockage items. What items we can take, I don't know. We ourselves have not gone into those detailing, but we can have a relook at that. And subject to council coming to agreement on that, we will like to take some of the items out of 17.5. I can just tell them. Whether the particular items you are asking, whether it is covered in that or not, I cannot say at this stage. Thank you.
Thank you, sir.
Thanks, Sanjay. I don't think the GST Council can make everybody happy all the time. But I think it has made a lot of us happy by the changes which were brought about in the 47th Council. And as a closing, I would want you to highlight some of the crucial ones which were there in the press note and a couple which were not there, which we haven't seen and something which we are going to see very quickly, I would hand it over to you. And of course, congratulate you as a convener of the law committee of the tremendous amount of changes which are brought about this time.
About the decisions of 47th council meeting. Press note was issued and lot of, already I think everybody would be aware of what was the outcome there. So rate rationalization was one of those things. Removal of inversions was also there. And then withdrawal of some exemptions and adjustments of rates of some items. But beyond that, this council has given a lot of clarifications which are there. And the purpose of those clarifications is to remove those ambiguities and to remove or avoid those disputes which are already going on. So that this litigation ends, past litigations are settled, fresh litigations are avoided. So when the circulars are issued, you will find a lot of those details detailing there, which will bring clarity, more clarity. One of such circular, I think, which will benefit industry quite a lot, is about the issue of liquidated damages, or that the issue of cancellation charges, whether they are taxable or not, whether liquidated damages are taxable or not, act of tolerating a service. On this, a detailed circular is going to come, which fitment agreed after a lot of deliberation, and council agreed. So one of those things which might not be clear from the press notes and the more clarity will come only when circulars are issued. Second, on the policy side, these are on the rate and related items. On policy side, I will say this decision of council to allow even unregistered suppliers to supply through ECOs and composition dealers to supply through ECOs. It will also give a major impetus to small sectors. And this was achieved after a lot of deliberation, and council has given in principle approval, but then again it will go back to law committee for finalization of the modalities, finalization of preparedness of the system, preparedness by ECOs. So tentatively we plan to bring it by 1st January. So a lot of work has to be done on that aspect also. Third, which is a very big thing, industry is there, and I will like to use this opportunity. One of the major thing which was brought before council was an overhaul of GSTR 3B. Again, the intention is not to bring any instability in the system. One 3B filing system has been stabilized. So it is not intended to disturb that, but there are a lot of requests from taxpayers and associations to provide some facilities in 3B. So like negative value amendments, reconciliation, reversals and reclaim. So present summary form of GSTR 3B is creating some limitations in that. So council has given in principle approval to place a draft GSTR 3B format, which was brought by law committee before council, to be placed in public domain, and to seek industries and stakeholders' view on the same. Because it's a major change, we do not want to do it unilaterally. Ultimately, you are the people who have to use it. So I will request everybody, we will be shortly putting it on the public domain. We will request you to provide your feedback so that it can be considered by the views can be considered by law committee again and brought before council, so that we can make the requisite changes in the times to come. Similarly, on law and procedure side also, a lot of circulars are coming which are providing clarity on various issues, and even some amendments to provide relief to industry, like duty credit scripts, no reversal will be required. We are clarifying through an explanation in the rules, and similar other provisions are there. So overall, the direction in this council meeting was very positive, and it was to bring more and more clarity and more relief to the industry. Thank you.
Thank you, Sanjay. I think it has been a wonderful session and a wonderful time speaking to you here. So thank you for coming here and speaking to us, giving us the basic understanding of the structure and where the GST Council is heading to from a rate rationalization perspective, and also clarifying on what all changes which we should hope for to come in the near future. Thank you, and we have always been very approachable, so thank you for that from the side of the entire industry. My thanks also to my fellow panelists, Rahul, Mr. Qureshi and Rajesh, for coming here and sharing the valuable thoughts about your industry. And thank you all for being a wonderful audience. Thank you. Yeah, Sanjay, you want to sit down? Sanjay has kindly consented to answer a few questions. I know we have a 3 o'clock session with the RS coming in, so 2 or 3 questions I'll allow. The gentleman who's made Sanjay stop, I'll give him the first one. The one with the mic. Okay, let's start.
So you start.
Can I start? No, I'm all right here. Thank you very much. Good, fruitful discussions. I would, Mr. Mangal, like you to refer to the first physical GST Council meeting post-lockdown on 17th of September 2021. A decision was taken. I am Kapoor from the Association of Synthetic Fiber Industry. A decision was taken to remove the duty inversion in the textiles and the leather sector, because the inputs have been taxed at higher rates than the outputs. The fabric is at 5%, MMF's at 12%, and cotton again at 5%. So a decision was taken that from 1st of January, and some notifications were also issued and publicized in the newspapers, economic papers and other papers, that this will be effective from 1st January 2022, it will be done. But suddenly we heard the decision was kept in abeyance. Maybe the atmosphere was not there. You've been talking about the atmosphere. So may I know, when do we have the atmosphere where this duty inversion will be removed? I'm trying to make it short.
Thank you, Mr. Kapoor. As you have mentioned, in 45th Council meeting, a decision was taken to remove inversion in textile sector. But later on in 46th meeting, as you know, just before it was due to be implemented on 1st January, again, like this special meeting of GST Council was convened on the request of some states. And there, I think it was almost a consensus, all the political executives, they decided, because they get a pulse of the people. They get feedback, not only from industry, but also from common people. And based on that feedback, they found that although inversion is required to be removed, there is no doubt about that. But the atmosphere was not there, right, conducive at that time. And they thought that it should be deferred for some time before again they can come to a consensus that now it is required to be implemented. In the present GST Council meeting, there was no decision on that, and it was decided that this decision on textile removal of inversion in textile will be taken in subsequent meetings. So when it will be taken, I cannot commit. It is Council's decision, and but Council has not withdrawn its decision, I can assure you. Council has only deferred the decision, implementation of the decision. So we hope, sir, that in the due course this decision will be taken to implement. But when it will be taken, I cannot commit.
कपूर साहब उम्मीद पे ही दुनिया कायम है. We should continue to believe that. And sir, question.
So I introduce myself. I am Sameer Bhasin. I am from Jindal Stainless Limited. So first of all, congratulate to everybody in regard to completion of 5-year GST. So somebody said that the baby, we are feeding the baby. The baby is now walking. If you see the 5 years kid, he is walking also. He start walking also. So now we are on that phase that we are walking, we are doing it. And thank you to the, basically the members also, policy wing also, that they given us that we can speak. Because earlier if we talk about excise, service tax and VAT regime, there is no era, at that time era we can speak and we can directly talk each other and tell our problems also, industry problem also. So my one question and the problem is in regard to my industry, that when we made the exports, suppose first I made the exports, and whether on payment of duty on LUT, it's matter at that time only. So in our industry, it is there that any escalation in price, it will be the additional consideration, and you will, buyer said, there is agreement that buyer will reimburse that amount to us. So my first question is to every member, every sir here also, what should I do when I made the first principal export on payment of duty? So what is my initiative if I received some amount after 3 months in the escalation of price of steel, I got the amount from my buyer?
Mr. Bhasin.
Yes.
Yeah.
Thank you.
I think this, whatever the question you are raising, this issue has been brought to our notice. And by chance, I was there in yesterday's ASSOCHAM meeting only. Your company only, I think, raised this issue before Revenue Secretary. The issue is when you are making export, at that time there was some price. And later on, because of some contractual clauses, it may be linked with some external pricing or something. The prices are increased. Prices may be decreased also. There can be a situation where prices are decreased. So in case the prices are increased subsequently, the law is very clear. You have to pay, this is additional consideration, you have to pay tax on that. So there is no two doubt about that. But I think I know your next question will be how to take refund of that.
Correct, sir, correct.
Okay. In LUT route, I don't think there is much problem. LUT route takes care of that. In GSTR1, you declare it. That adjustment you will make and that amount will be adjusted in subsequent months refund. The issue arises when you intend to take IGST refund.
Correct.
As you know, IGST refund is an automated route, fully automated route. As soon as you file shipping bill and you file your EGM and you also file your GSTR3B, your shipping bill is processed, your refund claim is processed, and automatically it comes to your bank account. But in the specific situation which you are telling, that after 3 months, suppose the price is increased, there is no separate shipping bill. So the system does not understand whether you have made you have got a refund claim. There is no refund claim on the system. Now, how to deal with it? One suggestion off the cuff, I can give a remark, and I suggested also LUT route is the best route for this. So a company which does not have other issues of capital accumulation of ITC and all, they can straight away go for LUT route, and I don't think there will be any problem in that. But in IGST route, we will have to find a system, because presently in the automated route it is not there. Maybe we have to devise a system when it goes back to the jurisdictional GST authorities where you can file a refund claim. But we are looking into it, I can just assure you. But in the meantime, I will suggest that if you are making some future exports, please try LUT route.
Sir, you are rightly said, this point has been raised at the time of audit actually, which we are also not aware of it.
Sir, can we take this question?
Wait, just a minute, only 2 minutes I take. But what I am saying ki now we are changed, we are moved on LUT basis. Now on the earlier, when I am talking about 17, 18, 19, which I already not considered, and now the penalty is raised on, and I'm willing to pay it. So now what is the mechanism to get the refund? Because refund limitation period is 2 years, which is already over. So now at that point when I'm making the payment, so what is the scenario? I given the representation that to consider the date of making payment instead of the supply date, so that it should be considered 2 years from the making the date of the payment when we are realizing the amount.
Mr. Vasim, the present law is clear. It is 2 years from date of export in case of a shipping bill. Okay. So as per the present law, the position is that. Now the specific situation of your company when you got to know it and audit and all, it can be separately looked into, but it's not a general thing on which some clarification is going to come or some law change.
So, sir, in future also if we make such exports, or some clarification should be there, so that when making the in LUT or on the payment of duty, we can get the refund of the accumulation amount, additional amount.
I have told you in LUT there is no issue. LUT presently also there is no issue. But on IGST we are looking into it. If in future somebody wants to do it, what should be the mode?
Thank you very much, sir.
We have too many questions still left. I'll take one last question. Madam at the back, can we pass on the mics? I'm sorry, she's been raising. I think we should keep some questions for the last session also. Otherwise, the Revenue Secretary will feel Sanjay has solved all the problems.
So first of all, I'd like to thank CII for arranging this session and the government on completion of 5 years of GST. So my question is in respect of the auto component industry. So in auto component industry, we are having a dual rate of 18% and 28%. No other industry is having such rates. Intermediary industry is having such rate. So I would like to put it forward for your consideration. Point number 2 is in respect of electric vehicles. We are having 5% of GST on the vehicles, whereas on components there is a duty of 18%. So can we expect some ease out on that?
Your point of view has been noted. It will be brought before council.
Sure,
I can
sir.
just say that.
Thank you, sir.
Thank you.
Can we, you want to ask? One last question, sir. Absolutely the last question. Can we give the mic here?
Yeah, Mr. Mangal, I think Arun Jaitley had a very...
Can you identify yourself, sir?
Yeah, Dr. Sarojit Jodeja. Arun Jaitley used to talk about single rate regime, and Rajesh tried to establish and convinced. And how long it will take to be and on 8th July we are having a first memorial lecture by Deputy Prime Minister of Singapore. So can you give some clue about how long it will take to be a...
Single rate. Now there is a big question, when we will reach single rate. If you want to take my point of view, I will say single rate will take much more time in this country. We are a diverse country. We have got diverse requirement of different sections, as I had earlier mentioned, and diverse requirement of different regions. We will continue with this rate of 28% on some of the items, which are sin goods or luxury goods. And at present, we are also continuing with this rate of 5%, or between 5, 12 and 18%. Maybe to come to a single slab rate will cause huge disruptions. There are items of mass consumption, if they are from 5%, they are straight away taken to 12 or 13%, a median rate. Then it will cause huge problems to the public. It will cause inflation on number of items. So I don't think that in immediate future, there are chances that we can do away with 5, 12 and 18 in one go. And we can come on one single rate, because 28% I will say this is an exception, and it is only on very few items, 37 items, and maybe that also is reduced over a period of time. But as regards 5, 12 and 18, we may have to come slowly to two rate structure first, and maybe in a long run then we can achieve one rate. But if you ask my opinion or views, the final view has to be taken by council. Council will decide everything. But if you take my opinion, I think single rate to reach at a level when there is a single rate in the country for GST it will take some more time. Thank you.
Thank you, Sanjay, and thank you everybody for those lovely questions. And thank you, Sanjay, for answering those questions so generously. Let's break for lunch. We have to come back before 3 o'clock for the next session. Thank you. Thank you very much.
Please proceed towards Aftab Mehtab Hall on the same floor for lunch, please.
आप बताएं सर।
आगे संजय।
check, hello, check, check, test, hello, check, test, test, check, hello, check, test, check, check, test, hello, check, 1 day, check, test.
Please be seated. We're starting the session in about a minute. Thank you. Let's move to the next special plenary session. I would now invite to the dais Mr. Chandrajit Banerjee, Director General, Confederation of Indian Industry, Mr. Sanjeev Bajaj, President, Confederation of Indian Industry, Mr. Vivek Johri, Chairman, Central Board of Indirect Taxes and Customs, Ministry of Finance, Mr. Tarun Bajaj, Revenue Secretary, Ministry of Finance, and Mr. Uday Pimprikar, Chairman, CII Core Group on GST and Indirect Tax Leader, EY India. I now request Mr. Chandrajit Banerjee to kindly take the session forward. Thank you.
Thank you. Good afternoon, ladies and gentlemen, and it's a great pleasure and privilege indeed to welcome, if one can say, the crack team of the Ministry of Finance, and we have two very, very important people with us this afternoon to bring together. There are lots of discussions which has taken place over the last few hours, and first of all, congratulations, big congratulations, and on this 5 years of a great tax transformation journey that we have seen in the country, to the Revenue Secretary and the Chairman of the CBIC. Thank you very much, both Mr. Bajaj and Mr. Johri, for being here with us today to celebrate and also to put up some questions to you, which you always very, very willingly take on. And as you know that we have been from this institution, from CII, working on GST for many, many, many years, advocating the GST, and after the phenomenal announcement that we saw 5 years back and the way things moved, we were working closely with our constituents, our membership, in seeing to it we were able to give you feedback on a continuous basis to the government on what were the issues that industry faced. And what's remarkable was the openness with which you always accepted the comments, the feedback, the suggestions that came on, and we saw this dialogue really see to it that we were able to not just put forward the industry viewpoints, but also see results coming out from your side in terms of making certain changes which were so very important and useful for the industry. In this particular group of people that's present here, we all appreciate your phenomenal efforts in terms of always reaching out and being able to interact and give very frank feedback also from your side on what would be possible and what not. The results we have seen, the phenomenal buoyancy in tax that we have seen over the years, and it's also been a phenomenal feedback which has come in from across the world, from different parts of the world in not only the force with which India has gone ahead with the tax reform and indirect tax reform of a kind that we have seen in the GST, but also which changed the image of India in terms of how aggressively we were wanting to address reforms and how clear we were in the roadmap as far as our economy was concerned. All of us are here, over here appreciate the efforts which have been put in by yourselves in terms of simplification of the GST law, the removal of various inconsistencies that we have been pointing out. There are a few which still we keep on asking, and we shall, and we would look forward to your interventions from time to time, especially when it comes to certain inverted tax structures and so on, and you will hear it more from the audience, and therefore I'd not like to stand in the way of yourselves with some feedback that comes from the audience, but also wanted to really once again congratulate you very, very warmly for this huge achievement and for giving to the nation such a huge reform which has enabled, as we all see the results, and all of us over here are familiar with the results that we have seen over the years. With that, I'd like to once again welcome both Mr. Tarun Bajaj and Mr. Vivek Johri to this meeting very, very specially. And ladies and gentlemen, as you can see with me, we have Mr. Sanjeev Bajaj, who has taken over as the president of CII month before last. And therefore, and in Delhi, we have, because thanks to COVID in his state and thanks to COVID to him, we have not seen him much in Delhi. So this is one of his first appearances, if I can say public appearances, as the president of CII. So great to have him on board. And also Uday Pimprakar has been one who has been going into the nitty-gritties of the GST, if I can say, from the CII side with our membership. And great, once again, ladies and gentlemen, to all of you, a very warm welcome and thank you very much for participating here with us. Thank you. May I now request Mr. Sanjeev Bajaj, President CII, to give his remarks, please.
Thank you, CV. Good afternoon, and personal welcome again to Shri Bajaj and Shri Johri as we cross this 5-year milestone of the introduction of GST. As we all know, this is perhaps the single largest indirect tax implementation, not only in India, but probably at one time anywhere in the world. And these last 5 years, through their ups and downs, have helped the nation create one common market, which is so important for us as business people, making our life that much easier. We must congratulate the government and specifically the Finance Ministry that took on most of this burden, along with, I must say, CII industry members who all contributed towards making this happen. We must equally compliment the CBIC and the GSTN and other bodies that helped in bringing us to where we are today. It's also a great example of how the center and the states can work together, can raise issues, can resolve issues, can find the right solutions which work for both of them, so that as a nation we progress, we proceed together. We also believe that this is never a one-off exercise, and particularly through the pandemic, we have seen the nimbleness and the openness with which the Council has looked at suggestions, For example, bringing down duties or exempting duties for critical medical items through the pandemic, and so on and so forth. A game changer, not only the direct impact of an indirect tax, but is the data on the GST network. We believe that for lenders, for insurance companies, this will help them in assess better risk profiles, extending credit and protecting business. And we are already starting to see momentum on that. And as the GSTN network gets integrated into various other digital platforms, we will see this entire sector of business, and I believe that it will support MSME businesses specifically, get greater access to credit in the near future. But as they say, ye dil mange more. And that's why we have a few more suggestions. And since we've got these senior people with us, one, of course, how can we further simplify? How can we bring down some of the inconsistencies, some of the inverted tax structures that we have in some sectors? Why can't we work towards a single centralized registration for services that work pan-India, like banking, telecom, insurance? This existed in the earlier service tax regime. It's not something new. And if considered, would significantly improve the ease of doing business for services industry. Setting up of a GST appellate tribunal, this has also been discussed in the GST Council meeting in the past, will help to expedite and reduce delays in the filing of appeals. So these are some of our suggestions for today, but today is as much, as CB has said, after we hear our guests, to hear from you all so that you all can ask questions as well. And with that, once again, we would like to extend our appreciation to the government, not only with the way GST was introduced, but the continuous effort that we see that is helping India grow better, that is helping with the ease and cost of doing business. Thank you.
Thank you very much, Sanjeev. Thanks for introducing some of the issues, and I'm sure we have the following two gentlemen address them adequately. With that, may I now request Mr. Vivek Johri, the Chairman of the Central Board of Indirect Taxes and Customs, who's our guest of honor this afternoon, to please address us.
Shri Sanjeev Bajaj, President, CII, Shri Chandrajit Banerjee, Shri Tarun Bajaj, Revenue Secretary, other dignitaries present in the audience. A very good afternoon to all of you. I'm delighted to be here today to share what I think is my qualitative assessment of where we are with GST. It's quite natural for us to ask the question on completion of 5 years whether GST has been a success or failure, and if a success, to what extent, and so on and so forth. And I can't help but recall that when GST was introduced in 2017 and in the run-up to that process, there were a lot of misgivings and apprehensions about how it will pan out, whether it will be possible in a country as complex and as big as India, whether the states and the center would work together collaboratively on the project, whether there will be a thick fat book of deviations as there was under VAT, and if the states or others, even the center, were not to adhere to the recommendation of the council, what will happen, etc., etc. Will technology actually sort of work itself out in the implementation of GST? Because right from its conception, we were clear that we wanted it to be based on an end-to-end technological platform, so that there was very little manual interface necessary with tax officials. So in my view, you can benchmark the performance of GST in many different ways. And before I come to that, I think it's only in order and proper for me to acknowledge wholeheartedly the contribution that the trade and industry in India have made towards the implementation of GST. We've been enriched all along, right from the design and the planning stage, with very valuable suggestions and feedback that we kept getting from you, so that we made as few mistakes, if I may call it that, in the design and implementation of GST. So thank you very much, and I appreciate that we continue to get that feedback from all of you. Like Mr. Bajaj acknowledged, there have been very clear-cut gains from the implementation of GST. I don't have to repeat them here, but I would sort of recall and urge you to think for a moment about what kind of a tax regime we were living in the pre-GST era. So, and as somebody who was involved for many long years in policy making in the central government, I do know that the industry was forever sort of complaining about cascading of taxes, embedded taxes, inefficient flow of ITC, fractured tax base, not enough revenue efficiency, how interstate movement of goods was a nightmare, and there was too much paperwork involved. There were too many small taxes sitting on goods and services at different points in the value chain, and how these taxes did not speak to each other. They were not, credits were not fungible. Obviously, all of these inefficiencies in a major way impacted the competitiveness in the global markets of our goods and services. And so we found solutions. It wasn't as if, solutions were not searched for and found to some of these problems, but they weren't, the most optimal solutions. And what we need to reflect about is that the GST, I think in one stroke, did find a solution to all these problems. So I'm so glad that most of these problems are behind us now. Apart from that, there are many externalities and very positive externalities of GST implementation, which also I would like to recall at this stage. And some of them which are easy to see are the digitalization that it has brought about in the entire ecosystem. So because taxpayers had to interface with tax departments through a common portal and an electronic one at that, to some extent it sort of compelled them to adopt IT-based solutions even for their own ERP systems and for running their own businesses. So it has led to a very rapid sort of penetration of technology amongst taxpayers and in the industry. It has obviously brought about a high degree of formalization in the economy, and this is evident from the fact that the number of taxpayers under GST has really grown, and the tax base in terms of number of taxpayers has almost doubled. And this is not something that happened immediately on implementation of GST. So we started with a tax base of about 65 lakh taxpayers, which wasn't very large for a country like India, but it's already grown to about 1 crore 38 or so. So this is obviously evidence of formalization in the economy because of the evident benefits from being a part of the ITC and the value chain. The third thing I keep talking about is the awareness it has brought about in the country on taxation. I don't think ever before in the history of India have we discussed, deliberated, criticized, commented, even as common persons about how taxes impact our lives. So, and those debates continue, and it's a very healthy thing, I feel, for the overall economy. And finally, the logistics efficiencies are another thing which a lot of people have written about, and particularly within the country, interstate movement of goods, the movement of goods from the stage of their importation till they actually find their way in to the point of consumption. The other day, when we were celebrating the 5th anniversary in the presence of Honorable FM, and we saw some presentations made by industry representatives, one of them very clearly said that the location of warehouses, for instance, is not driven anymore by tax arbitrage opportunities, and it's because the tax rates throughout the country are exactly the same. So they're driven on by more commercial and business considerations, which is the way it should be. Now, I would just respond to some of the common narratives or criticisms that have been that I have seen in the press and in the media about GST, and I would just like to respond to some of them to provide in my own way some sort of a corrective to these. So the first sort of narrative that one very often sees in the context of GST is about how when we started and launched the GST, the criticism is that we were not very sure of the design and its features, and that's why we had to make very frequent changes from time to time, and people even cite the number of notifications that the GST Council approved and had to be issued as a result of that. Now, I don't think this is a fair criticism, because the way I see it is that a very large and diverse body like the GST Council, which by the way is unique in the world, I don't think any other federal system has experimented with a body like the GST Council, and the normal perception and expectation was that it would perhaps be slow in decision making. But the kind of responsiveness it has shown to demands and legitimate demands of the industry and trade over the last 5 years is actually quite remarkable. So I don't read this as a sign of weakness. I think it's a very big strength, and I think, Mr. Bajaj also referred to the nimbleness with which the GST Council has dealt with the issues. So considering the fact that it was a large and diverse body with different political ideologies, you had state governments represented, you had the center there, and yet you were able to decide by consensus on so many issues that we were confronted with in the implementation of GST. And when I analyze the changes that the council has made over this period, I find that most of them were actually meant to streamline procedures. They were meant to be facilitative for the trade rather than restricting whatever was already available, and eventually to protect the honest taxpayer. So very often the changes that were made, for instance, to rein in fake billing and fake invoicing is touted as something that adds to the compliance burden. Well, maybe it does to some extent, but the point is that it's meant to actually protect the honest taxpayer vis-a-vis somebody who's gaming the system. So I think it's only fair to view it in that light. The second very big narrative, and I think it continues today, is about how GST continues to restrict the flow of input tax credit through the value chain. And first of all, let me say that when GST was ushered in also, I don't think there were any additional restrictions that were placed on the availability of input tax credit. In fact, if anything, the flow of credit right from the primary stage all the way down to distribution and retail became very smooth across the country, across the value chain, and so it's not appropriate to say that GST has in any way restricted the flow of ITC. Moreover, if you look at the decisions of the council, there has been further easing of this flow of credit. And I'll just give you some examples from the decisions taken by the 47th GST Council meeting, for instance. So services for personal consumption, such as catering, rent-a-cab, group mediclaim, etc., as long as they're mandated under law, it has been clarified that the credits of those will be available to businesses. So this is one, it's a clarification, but it sort of enlarges to some extent the scope of availability of ITC. On leasing, again, there's a clarification by the 47th that leasing is not restricted to any particular category of capital goods, and it's only the only bar is on vehicles. The third big thing is about input and output services. If they are the same and they're used in the same line of business, then credit is available. For example, you get credit of vehicles if you're in rent-a-cab business. Now, these are things that once again speak to enlarging further the scope of ITC. The one thing that I very often hear of is the works contract part, and businesses often turn around and say, but if you're constructing a factory, why is it that credit of cement and steel is not available? Now, my response to that is that you have to be also cognizant of the fact that your tax base is not absolutely comprehensive. For example, a movable property continues to be outside the net of GST, unlike many other administrations where it is charged to VAT. So till such time as you have a tax base which is not comprehensive end to end, doesn't include land, doesn't include petroleum, doesn't include alcohol, there are some parts of your business activity which cannot be sort of VATed, or which cannot which are not amenable to ITC, as long as that situation prevails, because there's a break in the chain somewhere in the value chain. And that's the reason credits are not permissible today. But I'm sure there will come a time, I don't know how far out in the future, when these credits would also be available. The other narrative about ITC, which one very often hears of, is the imbalance in the sharing of the burden, the compliance burden between the recipient and the supplier. And people turn around and say, but why am I being clobbered with the demand notice, or with why am I being asked to reverse the credit if my supplier has not paid the tax? Now, I think the council has also tried to address that and to improve that balance over a period of time. So two measures that I can recall in this context. One, of course, is that we mandated that any output supply which is indicated in a GSTR1 constitutes the legal liability of the supplier. So the whole purpose is that now there is a legal liability latched onto the supplier for any disclosure that he makes in his GSTR1 with regard to an output supply. And linked to that is our changes such as the sequential filing of GSTR1 and the narrowing of the gap between the filing of GSTR3B and GSTR1. Now, if you read these together, the implication is that you're in a sense introducing more payment discipline in the ecosystem, and that is meant to ensure that when the supplier is out to take credit, the recipient is out to take credit, the supplier has already complied with the provision to pay the tax. So, and on top of that, of course, we've used technology to make this more visible to every taxpayer. Now, let me come to the last part of the ITC narrative, and I'll give you some data points which I think will establish to you that it's not entirely right to say that GST has actually restricted credits. So, looking at data, I find that there are overall at least 56% of the taxpayers who are paying their taxes only through credits. So they're not paying any tax in cash. So that is one data point I want to share with you. And over a period of time, if you were to track the percentage of taxes that are paid through ITC, then there's been quite a sharp increase in the availability and utilization of ITC. So, and in terms of percentage points, it's almost 3 or 4 percentage points, and I'm talking percentage here. So that also goes to show that actually the ITC availability and utilization in the system have both actually gone up over a period of time. Some of the weak points which have beleaguered the other tax administrations in the implementation of GST, also we've been able to obviate in the Indian context, and that is something we should take credit for. So one of the things, for example, which is a very good case study of how the implementation of GST was mishandled in a sense is of a Southeast Asian country where I think they got the refund process completely wrong. And in contrast to that, I would like to sort of share with you that almost 96% of the IGST refunds in India are paid within 7 days, and it's an automatic process. There is no manual interface, and the moment you file your documents, the data is crunched to the back end, and the refund amount is credited into your bank accounts. Moreover, the total refunds from ITC and IGST are actually quite substantial, and the overall amount has gone up quite substantially over the years. That's one. The second, negative in the context of other countries was, of course, the lack of clarity about forms and procedure. You would agree that most GST procedures have now stabilized. With forms, we were quite quick in recognizing that the GSTR 1, 2A, 2B, 3, that system was not going to work. And even though the GST Council put together a group, which looked at, how the entire return system could be reformed, and there was a committee which recommended an entirely new architecture for returns. They decided to go along with the existing return just so that it's not disruptive. And I think the GSTR system has now settled down very well. And with the revolutionary change that came about with the introduction of e-invoices in October 2020, where we are able to construct and auto-populate all your returns based on your e-invoices, I think it's a very, very major improvement. The entire debate about how Indian GST is not going to work because you won't have invoice matching has become redundant now, because you have a single source of truth, which is the invoice, which is generated electronically on the system. We've been progressively reducing the threshold for issuance of invoices, and over a period of time it's almost going to become universal. So transaction level data is what your system is going to capture thanks to technology, almost universally, both for goods and services across the country, and that gives you the ability to construct all the returns that are currently prescribed, and that also gives you the ability to do away with invoice matching completely. So the entire debate, the negative debate, if I may say so, about how we are not getting invoice matching right and all, has just gone away over a period of time. So these are some of the achievements. According to me, there were 4 critical success factors for whatever we've been able to achieve, and I'll quickly sort of go through them. One is the institution of GST Council itself. I think it was a very unique experiment which has worked very well to everybody's advantage in India. The second is the technology platform, which I talked about, the GSTN. Of course, there were glitches at the beginning, but I think they were soon rectified, and 2020 onwards, we've not had any major problems, thank God for that, in the GSTN platform. And the number of tickets that are raised, which we monitor very regularly, has come down precipitously, and I can share the data with you. The comprehensive outreach and handholding that we did at the beginning of GST, both for the trade and internally for the department, I think has served us very well. And the fourth, of course, is the unique model of IGST which we've adopted in the country. I can't think of any other country or administration, including the European Union, which are very mature GST systems, where you've had something of this kind, obviating the need for refunds when goods move from one jurisdiction to another, and yet ensuring the passing on of ITC through the chain. So, in my view, these are all very big achievements. Now, Mr. Bajaj referred to 3 more asks of the industry. I do want to assure him that these are parked with us. We've been examining them. So further simplification to remove inverted duty structures. I think in the 47 GST Council, a very large number of inversions have already been removed. In the 45th also, I remember, we removed many of the inversions. But like, any other situation, one man's meat is another's poison. So, when you're removing inversion, somebody somewhere, reacts because, duties or taxes have to be enhanced to remove the inversion. Centralized registration has been a demand of the industry. I think technology may make it possible in the future, but we have to work a little more collaboratively with the states who had fears in the past about improper accounting of revenue. If we were to go in for centralized registration. But in my view, technology and all the transaction level data that we have with us, where the address of the recipient is also captured, I think should make it possible at some point in time. I cannot commit when. Centralized registrations, and of course on appeals and dispute resolution, there's a GOM which is looking at constitution of tribunals, and I think very soon we'll have something concrete on that. So I'll stop here. Thank you very much, and I'd be happy to take any questions.
Thank you very much, Mr. Johri. Thanks for that very comprehensive presentation, and also basically taking up some of the points that we have been raising to you, and also clarifying some of the points. I would not get into those details, but I just wanted to mention that such a reform in such a period of time, obviously with the challenges that you mentioned and how you navigated through it, has actually been extremely well appreciated, not just by the Indian industry, but also many of our global investors here, as well as people across the world has appreciated that. The second point that I just also wanted to mention was, you mentioned a few times about the GST Council. Actually, I was just talking to Mr. Bajaj, Mr. Tarun Bajaj before coming into this room. We take the example of the GST Council's work and try to sort of talk to many other sectors as to where India could perhaps have that type of a council approach to bring in states together, be it in the in areas like agriculture or power and other things. So it was a great way to actually bring the states together to come to consensus, and deeply appreciate once again the phenomenal interactive sessions that we have had with the ministry and the industry over a period of time. With that, ladies and gentlemen, it's my pleasure and honor to invite and request our chief guest, the Revenue Secretary, Mr. Tarun Bajaj, with whom, of course, one has had several interactions in the past in many avatars of his, and it's great always to listen to him, and it's always a great pleasure when he listens to us and responds. Over to you, Mr. Bajaj.
A very good afternoon to all of you. Mr. Sanjeev Bajaj, my colleague Mr. Johri, Mr. Chandrajit Banerjee, Mr. Uday, members of the industry and trade, ladies and gentlemen, and not to forget friends from the media. I find it very nice and also a bit intriguing that the trade and industry bodies are celebrating tax days. So when I came here, I mentioned this to Mr. Sanjeev Bajaj and Mr. Chandrajit Banerjee, and yesterday also in a different forum I did mention it. And then I told my other colleague, the CBDT, I said, when is your day? So he said, it's coming soon. So 24th July, and he's getting ready to celebrate it as well. So, and normally, even when I came here last year, I think I came to Department of Revenue sometime in March, and suddenly 24th, 25th of June, I was told that 1st July is the GST day and we have to do something. I think over a period of 3, 4 and 5 years, we have seen a distinct change in the approach of both the administrators and the taxpayers, which is all of you here, towards GST. I saw a lot of enthusiasm even last year, but I didn't see the enthusiasm which I have seen in the current year, and I give all the credit for that to all of you who have actually made GST a success by accepting it wholeheartedly and bearing it out with us when GST was going through a difficult period and showing that patience. So I'm extremely grateful to you for that. Mr. Johri has taken you through some issues that you have been facing. So what I'll do is, I was just looking at it. I know the history, or I've been part of it for the last year and a half almost. But before that, I was looking as to how the tax rates came up, how did we decide, because there's always this message that I keep getting from all of you that why can't we have one rate, two rates. So I said, let me try and understand how the rates came into being, and what I realized was that we took the excise duty, we took the VAT, and we combined the two taxes and tried to put them in some bracket. So I have some figures here. I'm told that cement was at 35% before GST came into being, and it was put into 28%. Similarly, the white goods were about 31.5%, and again they were put into 28%. And the 28% list itself was close to about 230, 240. And over a period of time, because of various reasons, both from our side and also demand from your side, these rates underwent a massive change. In fact, if I look at the bucket of 28%, it went down from about 230, 240 odd to about today about 35, 37 only. Today also when I came in, I think you were mentioning to me that why can't we have one rate. So though I've spoken about it about a few days ago, but let me say it again here, that basically there are three rates as I see them, 5, 12 and 18, and 28 as I call them luxury and the sin goods rate, which has got only 37% of 37 items, though it contributes almost 16% of the total revenues of GST. So it constitutes quite a bit, but it's a separate category as I see it. The 5% contributes about 10 odd percent, and the 12% contributes about 8%, and the 18% is the elephant in the room, which contributes about 65%. So I don't know whether India is ready to go for one rate as was suggested by some here, but perhaps as time passes by and as we keep correcting the exemption, the inverted duties and get rid of exemptions, I think perhaps this 5, 12 and 18 can in the first place move into two rates. But it's a challenge even to do that, because whenever, as Mr. Johri very rightly said, and I'll reply to that because there's a lot of noise which has come out yesterday and today on some of the items that were decided in the 47th Council meeting. So I would like to put my point of view on them. It's pretty difficult, I find, to take these decisions, and I would say a lot of courage, maturity and wisdom has been shown in the 45th and the 47th Council meeting, where very major decisions were taken on inverted duty, exemptions and some kind of rate rationalization, which also included bringing down the rates on some items. The other thing is that when I look at the items, I find that there are large number of exemptions. And I used to tell Mr. Johri and my TRU colleagues that I get, if I may take the example, I get at least one visitor asking for exemption. And I'll take the example of somebody who's on my side of the territory, and that is the regulators. So we've given exemptions to RBI, SEBI. So there would always be a RERA, there would always be electricity regulator from somewhere or some other regulator which a particular state had set up asking for these kind of exemptions. And on the one hand, we were spreading these exemptions to these bodies, And on the other hand, I would get this message, why can't we simplify tax rates? So simplification will come if we get rid of all these things, and I think in the 47th meeting, we have actually taken away, and the 45th meeting also, we have taken away a lot of exemptions, but exemptions still remain. Work needs to be done on that. On the services side, we still have a large number of exemptions, and I think the CBIC, the GST Council, and all of us in collaboration with the trade and industry will continue to work on that, that if we can prune this list of exemptions. While we need to provide exemption to certain categories, health sector, for example, is one of them, but can we do that? The other thing is the inversion, and I think inversion is something that creates an arbitrage between the local manufacturer and an importer of goods. So if there is an inversion, the imported goods become that much cheaper or easier to spread rather than manufacturers. And I see this conflict, and I saw this conflict when we were trying to do the textile bit, where the traders and the users were asking for a lower rate irrespective of whether there was an inverted duty or not, and the manufacturer was coming to us and saying, please correct the inverted duty because I'm at a disadvantage. So this is also a very important balance that we need to maintain, and I think it's very important that we take care of these inversions. So we did away with inversions on mobiles, footwear, oars, railway products, then textiles we tried, as I mentioned, but textiles, something we failed. On the inversion also, in this meeting also, we have taken a number of steps, and I think something more also needs to be done on that, and that effort will continue in the next few meetings. And as I say, 5 years is a very short period for any tax structure, and a tax structure in a country which is as complex as India, where you have the center, you have the states, where the central administrative forces are working with the state, and it creates that much of frictions. But the fact that we have been able to get here, I am very hopeful and optimistic that some of the other rough edges, if we can, most of the rough edges, if we can address them in the next 2 to 3 years, I think then we should see a fair bit of stability in this tax rate, and all of us can get down to our real business, which is from your side doing business, and from our side seeing that everything is working perfectly and looking at how to facilitate the taxpayers. While I've said this, I would like to say a few things that I have read in the newspapers today and give my perspective, though I have already conveyed to my office staff that if people want to see me, come and see me, they are most welcome. I would like to understand your viewpoint, and I'm very fond of meeting all of you because you are the ones who are actually doing the real work on the field, and nobody better than you to tell us how much is the shoe pinching to you, and for us to appreciate that and try and take certain steps to ameliorate the pain that you go through. So one of the issues that has been decided by the 47th council meeting was to levy a very small GST of 5% on hospital rooms more than 5,000 rupees. And these are, mind you, non-ICU rooms. So in the ICU, I can agree that the expenditure can be really high. And today I read somewhere that there was a mention that this is a bolt on the affordable healthcare. So I was quite perplexed because we as in the service that I belong to, we have had the privilege of working in very small towns. I worked in towns with population of 50,000, 70,000, 1 lakh, 2 lakhs, and I still keep in touch with those places. So I'll take a name of some places. I don't know whether there would be hospitals in smaller towns like Panipat, Karnal or Meerut, where a hospital room would be costing 5,000 rupees or more. I would also like to know that how many hospital rooms are there in this country, and out of those, how many actually charge, how many rooms, what is the percentage of rooms that are charging more than 5,000? I think it will be minuscule, and I think all of you here would agree with that statement of mine. So if I can spend 5,000 rupees on a room, I can perhaps spend 250 rupees on a GST, and especially I can assure you that this GST which comes into a common pool will be used to also, not for everything, to also for the poor, maybe free food for the poor or things like that. So I think when you say that we have to get rid of inverted duty exemptions or bring that semblance, I think there needs to be an understanding that what is it that we need to ask for and what is it that we should accept. So I feel, if I'm wrong, please correct me. If I have not understood a point of view, please correct me. I'm absolutely open to that. But I don't see any reason that there should be any such kind of messaging that a 5% GST on a 5,000 plus room non-ICU is hitting at affordable healthcare. I don't see any understanding of that, and I would again emphasize that I can't comprehend that particular thing. I was also told that this will create complexities. Complexities because there is a package deal in a hospital. For example, you go for a cataract operation and he'll charge you ₹1,00,000 rupees. So we don't know how much is the hospital bed or how much is the... but I was, fortunately, your president is, comes from he's got much more experience than any one of us on insurance. And I also for a little while have held the position of JS Insurance, so I know a little bit about that. But I think when you calculate your packages, you also do a costing part of it. The medicines also, some of the medicines have a GST rate of 5%, others have of 12%. There are other items that would have. So once you build, I think today, I don't do it manually where I'm dependent on that clerk sitting on the front desk trying to figure it out in every package as to what it will cost. But I think it can be software driven. So you have to write the software, you have to be sure that what you're charging from the customer, if it is more than 5,000, please go ahead with a 5% GST. If it is less than 5,000, don't go for a GST. I am concentrating on healthcare because there was a lot of messaging from the healthcare. There was another thing on the zero rating of healthcare, which means that all the, right now because the output is not taxable but the inputs get taxed, so all the input taxes remain there and they are not refunded. So I think zero rating today as per law is only available for exports, if I'm correct. And even during the COVID times, we had this big discussion in the GST Council as well as outside the GST Council about zero rating. And I think we need to be careful because once we start that, we will then have to come to education and other areas which would also demand a similar thing. Also, what is important for us to see is that the states and the center also need revenues for generating, they need to generate revenues for carrying out their expenditure. And the more such kind of carve-outs that we do, the burden on certain other items will go up. So the better thing would be to spread the base, have lower rates, and that's how to go about. Let me say this, that what we are going through is an evolution. While we go through the process along with you, your feedback, your inputs to us will make us reach a situation where I'm sure we'll be much better off. Say 5 years or 10 years down the lane, I anticipate that once our economy is even larger than what it is today, maybe 1 or 2 rates and much lower than what they are today, and on a large number of products and value would perhaps be the best thing to do on the indirect taxes, and the indirect taxes GST should be the mainstay of the indirect taxes and maybe contribute 35 to 40% of my total revenues, while the other being contributed by the direct taxes, which is what it should be. Before I close, I also want to say that I was telling your president in the anteroom that wherever I go and when I speak about the revenue increase, and now when I was in my 6th or 7th standard and my mom used to ask me कि आज unit test का result निकला होगा, क्या निकला? So on the first I find my Prime Minister, my Finance Minister, the media friends, everybody asking me कि GST का कितना revenue निकला. So I feel like I'm appearing for a test. I've appeared for a test and the result comes out on the 1st of every month. But fortunately, so far, so good. We have been able to raise good amount of revenues, and I think that is also one reason that the acceptability of GST has come from there. But at the same time, I find that this whole system of formalization, of ensuring that we work now in a system where we pay our taxes, we file our returns, and we do transactions through the banking channels, is having an effect on taxes all around. And I think the direct taxes have also benefited a lot because of this particular thing which has happened in the GST. So India structurally, I feel, is undergoing a change for the better. And I'm sure while we celebrate the 5th year, when I say we celebrate the 5th year, that means we introspect the 5th year as to what has gone right, what has gone wrong, what is there for me to do in the next year, next 3 years, next 5 years. I'm sure the 6th year, 7th year and 8th year will be far better and far more optimistic than we are today. I would like to, at the end, thank CII for having me and giving me an opportunity to speak to all of you. Thank you so much, and I'm grateful to you that you are celebrating GST Day. And I wish that such days are also celebrated, because it also raises awareness amongst the people. The media gets filled up with news on GST closer to 1st and later on. And there is one more item which I want to mention here, which has not been mentioned, that on the 1st of July, the Honorable Finance Minister gave 5 certificates to the MSME sector who had been very compliant with GST. I just wanted to say that we have actually given this to more than 50,000 people this year, as much as we did last year. So our desire is also to give the credit for good GST, for the compliance to the taxpayers, and to give them the feeling that yes. And I got a message from one of my classmates who maybe got in touch with me after 30 years to say I was pleasantly surprised to receive this certificate, and thanks Tarun that you also think of us. So thank you so much for having me.
Thank you very much, Mr. Bajaj, for that wonderful presentation. Yes, we are celebrating huge reforms, we are celebrating great ease that industry is facing. We are also celebrating your great marks that you are achieving on the 5th year, and thanks to those marks we see the taxation, as you mentioned, going down and the number of rates coming down over a period of time. I hope your marks improve even further when you go to the 6th standard, and so thank you very much for that presentation. But we have lots of questions which we have from the floor, and you've always obliged both you and Mr. Johri in terms of clarifying some of the specific questions of the industry. And I'll request Uday Pimprakar, who's been handling as I mentioned, the bread and butter issues of GST with our membership, to pose the first question, and also then take on a few from the membership.
Thanks, Ibi. Thanks a lot again for coming here and gracing this. I had a very basic question. I mean, you guys have done really well over the last 2-3 years, I can say, to get the revenue bit in place. I mean, a lot of policy focus was very purposeful to getting it. You've ran the compliance culture in this country in place. I can say that. I mean, I remember coming to your predecessor, asking him to defer the e-invoicing a little bit, and I was wrong, I can tell you that. I mean, that e-invoicing getting implemented has really made a large amount of difference. What is the next summit that you're trying to kind of focus on? What is the next? I can think about the cascading impact. Okay, obviously there is some structural change, but also there are some low-hanging fruits related to some maybe arbitrary deferrals of credits. Let's say you don't give credit on advances while taxes are paid, or for that matters, reversals of credits on let's say things being destroyed and those kind of things. Are you now going to look at this being the next phase of maybe expanding the credit mechanism being the phase that you all will be looking at? Apart from the rate policy, I can see that the rate policy, I think you guys are... So what is the next focus area?
I think the next focus area from our point of view is definitely scrutiny and audits, because we've ramped up the number of returns that are coming in, and that's very good. We've touched a percentage of, I think, 85 or 90 over a period of time due to sustained efforts that you just mentioned. But now we want to look into what is the quality of those returns. And I can't think of any VAT administration that doesn't do audits. So this is another area, around which a narrative is built, that it's very heavy in terms of compliance burden, and we're getting notices from all over the place. What I do want to assure all of you is that we definitely want to make the process easy. We don't want to be very intrusive in terms of audits and scrutiny. We're very clear about what we want to do in scrutiny, and that is, of course, a very, very non-intrusive process. That's the way I see it. Audits are a little more sort of intrusive, but yet we want to make the process easy. I am aware that the industry has concerns about being asked for loads of documents in the name of audit. We're trying to streamline that. So that is a very high priority, for CBIC. Opening up of credit further, we're always open to suggestions, and if we think that these are doable things, easily verifiable, I don't think we have a closed mind on that. So let me stop.
Thanks. Can I ask Mr. Somani, you had a question? Yeah.
Good afternoon, and thank you very much for giving me this opportunity. I'm asking you a question which has been repeated many times before, but at the cost of repetition, because where we are actually situated today, and that is on the matter of GST on petroleum products and natural gas and ATF. So as you know, that gas is raw material for many industries, and prices since the last year today are 3x, and this is causing a very big concern for many industries, especially ours, where energy is about 25% of the cost. From what we understand is that when we take a gas from a supplier and it comes to us through a state or two states, whatever it might be, there are cascading taxes which are not evidently in the open, but what we understand is that there is a 15% tax between the states, and then the states then charge you 6%. Every time we've raised this question, the question is also that the states lose revenue. But if the tax credit, input credit is given to the states, and then the 6% or 7% which is being charged on the bill to us is also credited to us, then there is really no loss, and it'll make a difference of almost about 20 to 20%, 22% on the cost. And in today's time, when When we were paying for gas at what, 29 rupees, today we are paying 83 rupees, and everything cannot be passed on to the consumers. So it's not just the domestic market which is suffering, but also the exports which are suffering. So maybe this might be an opportune moment for the GST Council to look into this. That's my question.
I think we are quite aware of what you have mentioned, and an attempt was also made in, I think, the 45th council meeting, and there was a discussion on this. I know I am on the media, but I will definitely suggest that while you keep talking to us, we are quite appreciative of this issue. I think it's important for you also to engage with the states at this point of time, because GST Council is a body that will carry the states and the center together, and that's the effort. So even if I take an agenda there, I think I need the support of the states. And it's not a very, maybe in the next 6 months or a year, we might notice that once the revenues go up and everybody sees the benefits of GST coming to them, there may be more acceptance on this. But otherwise, we have seen that there is little traction for that. But though I agree with you completely that rather than trying for the whole thing, we could first maybe try for ATF and the gas. So that's on our mind. So give us some time, and because I wish the GST Council meeting was also available for you to see what happens there. It's a nice meeting. A lot of good discussion takes place, but you have to convince everybody.
Mr. Goel, I think you had a question.
Good afternoon, sir. I would like to make two requests, both on procedure or ease of doing business. One is, like CIA President said about the central registration. I understand because of state registration, it may not be immediately feasible, but if the audit can be done in a centralized mode, because most of the manufacturing company have a main plant, but maybe administrative office in each state, and maybe a hybrid, like all company level data can be collected centrally and branch wise data can be given separately. It would be much easier for both, for the government as well as SSE to handle the audits. The second registration request is if there can be some more data integration between CBDT and CBIC. Basically, if all sale purchase data, which is today part of GST and because e-invoicing, if same data can be given to income tax department, so they don't keep on bringing new TDS provision. Sir, if I give a small example, if we make a sale of 100 rupee, we pay 28 rupee as GST, purchaser take input credit. On 100 rupee small 194Q, 10 paisa TDS, same paperwork, same thing has to be done for that 10 paisa. We deposit, next fellow take credit. If the data exchange is there, if both can be integrated, it will save a lot of administrative work. Thank you.
Centralized audit, as I mentioned in my remarks, I think it's something we can look at. It's not very easy to work it out because there are so many permutations and combinations that are possible. And when we talk to the states about it, the normal sort of reaction is, but then everybody knows that registrations are at the level of the state and each state is a separate jurisdiction. So it's time businesses got used to the idea of maintaining accounts at the state level. In certain lines of business, perhaps that's not doable. I take your point. And we need to do some more homework on how we can make it happen. On data exchange, of course, RS would have the last word on this, but let me reveal a secret. We are already exchanging data with the CBDT. There is a lot of data triangulation that's happening, and that's helping us a lot in risk profiling and all of that. But I think what you're talking about is sharing of data from the point of view of facilitating businesses so that the same data can be used for GST and income tax purposes. It's a good idea.
Mr. Goel, I think you are speaking about that 0.1% GST. So it's, that provision came not this year but the last year. So give us some time, because that has in a sense improved compliance to a great extent, and I think the taste of the pudding is in the tax revenues going up. But I completely understand your pain on that, and that's on our mind, and maybe in some time to come we should do away with that. So Mr. Johri, what Mr. Goyal is saying is, rather than deducting TDS from me, why doesn't CBIC tell CBDT that this is his turnover or this is the deal that he's done? So I completely understand, and maybe as technology we are improving on both sides, we'll reach that stage.
Okay, maybe we can have Vinod.
So just two quick suggestions or requests. One is to do with the GSTN itself. I think there is scope for easing that on a doing business perspective. To give you a very simple example, today you can look at your e-way bill report, but it's only for a 5-day window. So if somebody has to download it for the whole month, he has to do this 6 times, he's spending too much time on the platform. So some simple thing. In fact, if the APIs can be released to some extent, I think there is and that's my second request, not only for us as a company or as an enterprise, there is a lot of information that we can get back from that portal, but we can also get it as an industry. So for example, what is the total economic value add in the electronics business that I come from? Now I think the GSTN has that answer, and if some of those APIs can be provided, or there is a way that that data can be shared, it could result in a lot of action on both sides, on the enterprise and on the industry sides.
See, one of the underlying assumptions, of course, I mean, there's a wealth of data with GSTN, but what we're not focusing on is the quality of data and its granularity. And every time, we've, for instance, talked about use of HS codes, there's a pushback from the industry, and everybody starts crying about use of HS, and as if it's something alien. We're using it all the time in customs. But the moment we talk about it in GST, it's a different narrative, and it's seen as adding to the compliance burden. The point we have to understand is that if you really want to use this data well, you have to focus as industry also on the quality of data that you're turning in and its granularity. So, but it can throw up a lot of valuable information for all of us.
Just missed out on one sort of suggestion. You are using, the taxpayer today is also ensuring that for my suppliers that he is compliant of paying the GST tax. If we just change that a little bit from a mindset, you could actually ensure that all of us in the trade start paying each other on time. And I think that could be a big, so from a payment behavior perspective, we could be a very different country in a couple of years from now if we begin to use this GSTN network to ensure that GST credits are only available once it's paid, or at the moment I think it's 180 days, but you could even make it 90 days or 60 days to begin with. Because there is a rule for SMEs, for example, in 45 days, but we know that there are a lot of aberrations in that, and instead of holding it from the ROC perspective, maybe GSTN can do that.
Okay, I think Ashok, you had.
Hello sirs, my name is Abhiraj. I am part of the Startup and E-Commerce Council at CII, also represent Urban Company. I have a couple of suggestions. One, today if an individual or a small business gets a GST registration, they necessarily have to pay GST and then claim a rebate in case they are below threshold. It could be considered that individuals can get registrations without the need to pay taxes if they are below threshold, just like they get a PAN card. Because the GST registration today is a way to become part of the formal economy, and it's often seen as a legitimate number and registration you need for getting onto e-commerce platforms. The other is there are still certain situations where there is a disparity between online and offline when it comes to GST. For example, service professionals, when they operate on service e-commerce platforms, there is a tax collected at source by the service e-commerce platform of 5% in several categories. and this they don't have to pay offline. This is for all professionals below threshold of 20 lakhs. Of course, if they're above threshold, they have to pay 18%. So if that could be considered, that would be great, and it would encourage all of these small professionals to come on to the Digital India platforms.
Okay, should I? Any one more? Okay, I don't know whom to ask, so maybe. Okay, there's a lady. I can ask the lady. There's just too many.
Good afternoon, sir. My question is about, we've been hearing a lot of news on the GST rate rationalization. Do you see a time window of, having the rates rationalized? And if so, I'm keeping the 28 aside, so we're looking at 2 rates.
So your question is, when do we have the rate rationalization?
Yeah.
I think the GOM is looking into it, and they have given an interim report. They gave a report on exemptions and inverted duty and held back the rate rationalization report. I think we should give it to their wisdom, because they perhaps don't see the present situation with economic situation, that we should also try and bring that. I think we'll have to wait for some time.
No, thanks very much, Uday. There's 2 points which I thought that if you would like to respond to. One, when I started speaking, I did, and after Mr. Johri's speech and before you spoke, Mr. Bajaj, I mentioned about the GST Council and how it was a great cooperative federalism at work. But it was not without hitches in the beginning, we could see that. And as you mentioned that industry has a role to play at that point in time, we were also trying to reach out to states, etc. But what was the secret sauce behind that working? We would like to know, because that's an example, as I said, we are taking it for around to see if it can work in other areas. So that was one. And second, the GST collections, do you really put it more on compliances or the collection to shore up, or more because of the economic activities really going up? So is that, what do you attribute it to? Or the second related issue, which I think is important at this point in time, does inflation anyway have a role to play? And as we all know, indirect taxes have a major part as far as inflation is concerned. So how do you see in the GST front that we are able to deal with inflation over a period of time?
On the GST Council, I'm just a member secretary, and it will be presumptuous on my part to comment on the functioning of the GST Council. But I can say I have very little experience. Yesterday or 2 days back, I met a journalist who said, I've covered all the 47 council meetings, and I was quite amazed. I've done maybe, I don't even remember, 4 or 5. But I have found it, we have this tendency of deriding a lot of our institutions, but I would say it's building up to be a very good institution where both the center and states look at not only welfare of center and states, but also look at the welfare of the people. I know a lot of suggestions, having gone through various committees, come to the council, and the council says, no, we think that this will actually put a lot of burden on the industry in terms of compliances. Can we not delay it? Can we not change it? And such kind of decisions have been taken. So I am very optimistic and very positive about the functioning. And I would also say, as I was telling you in the ante room, that this council is also assisted by a whole set of very, very committed officers who endlessly meet. And one of the benefits of COVID that has happened is the online meetings that happen. So they meet at a very short notice, discuss it threadbare, come back and discuss it again, and thrash out those issues at the bureaucracy level. And then I also go and do a meeting with the officers before the council meeting. So that thrashes out a lot of issues before we actually reach the council. And in the council also, I've noticed that if even one single member has a doubt on a particular policy, that is mostly deferred unless the council is able to convince them. So I think the functioning is happening very nicely and very well. And I think if we want to replicate it, it'll be interesting. CIIs always can do a study and see what's happening, talk to people, and take the good parts and maybe implement it at the other place. The revenue is going up, whether it's going up on account of A, B, C, I think it's going up on account of all the three things. It's also, it's inflation, it's real GDP, it is good compliance, and also that the economy is coming back after COVID and some of the sectors are coming back with a vengeance. So I would just like to quote you a figure that last year the GST, gross GST went up by 30%, while the GDP nominal was about 19.5 to 19.8. So it's a very good buoyancy. So this buoyancy I don't think can come only from maybe if the inflation we feel is higher in the GST commodities, but also because of good compliance and a bit of formalization also, I would say, which has happened over the course of time. There was another question, I forgot. Okay, thank you. So I said inflation is contributing to this, and indirect taxes have an impact on inflation. That is why, to answer your question, that the council has been a little cautious not to burden the common man, and I think they'll be conscious of that. So let's see how does it go.
Want to add my two-penny bit on inflation. I think you have to be mindful of the fact that inflation impacts both inputs and finished products more or less equally, unless we're arguing that the price rise that finished products have seen is much more than the price rise on inputs. It's unlikely that inflation would have a major role to play in shoring up GST revenue. So that's just one corrective that I wanted to make about inflation.
Thank you very much, Mr. Bajaj. Thank you very much, Mr. Johri. We deeply appreciate this engagement of yours with the industry and this interaction, which is not just one-off, which has been a regular feature of your ministry and yourselves, and we always would like to stay engaged in this manner. And thank you very much, and congratulations on behalf of everyone present over here once again to you, and many, many, many more years of higher marks to you. So thank you very much, ladies and gentlemen. Please join me in giving a warm vote of thanks.
Thank you, ladies and gentlemen. Please join us for tea in Aftar Mehtab Hall. Thank you.